strategy. Very few of us are chosen to win the world's chess tournaments. Some of you may find opportunities surfing along in the new high-tech fields, the Intels, the Microsofts, and so on. The fact that we don't think we're very good at it and have pretty well stayed out of it doesn't mean that it's irrational for you to do it. Well, so much for the basic microeconomic models, a little bit of psychology, a little bit of mathematics, helping create what I call the general substructure of worldly wisdom. Now, if you want to go on from carrots to dessert, I'll turn to stock picking, trying to draw on this general worldly wisdom as we go. You have to figure out what your own aptitudes are. If you play games where other people have the aptitudes and you don't, you're going to lose. I don't want to get into emerging markets, bond arbitrage, and so forth. I'm talking about nothing but plain vanilla stock picking. That, believe me, is complicated enough. And I'm talking about common stock picking. The first question is, what is the nature of the stock market? And that gets you directly to this efficient market theory that got to be the rage, a total rage long after I graduated from law school. And it's rather interesting because one of the greatest economists of the world is a substantial shareholder in Berkshire Hathaway, and has been from the very early days after Buffett was in control. His textbook always taught that the stock market was perfectly efficient and that nobody could beat it. But his own money went into Berkshire and made him wealthy. So like Pascal and his famous wager, he hedged his bet. The iron rule of life is that only 20% of the people can be in the top fifth. Is the stock market so efficient that people can't beat it? Well, the efficient market theory is obviously roughly right, meaning that markets are quite efficient, and it's quite hard for anybody to beat the market by significant margins as a stock picker, by just being intelligent and working in a disciplined way. Indeed, the average result has to be the average result. By definition, everybody can't beat the market. As I always say, the iron rule of life is that only 20% of the people can be in the top fifth. That's just the way it is. So the answer is that it's partly efficient and partly inefficient. And by the way, I have a name for people who went to the extreme efficient market theory, which is bonkers. It was an intellectually consistent theory that enabled them to do pretty mathematics. So I understand its seductiveness to people with large mathematical gifts. It just had a difficulty in that the fundamental assumption did not tie properly to reality. Again, to the man with a hammer, every problem looks like a nail. If you're good at manipulating higher mathematics in a consistent way, why not make an assumption that enables you to use your tool? The model I like, to sort of simplify the notion of what goes on in a market for common stocks, is the parimutuel system at the racetrack. If you stop to think about it, a parimutuel system is a market. Everybody goes there and bets, and the odds change based on what's bet. That's what happens in the stock market. Any damn fool can see that a horse carrying a lightweight with a wonderful win rare and a good post position, etc., is way more likely to win than a horse with a terrible record and extra weight, and so on and so on. But if you look at the damn odds, the bad horse pays 100 to 1, whereas the good horse pays 3 to 2. Then it's not clear which is statistically the best bet using the mathematics of Fermat and Pascal. The prices have changed in such a way that it's very hard to beat the system. And then the track is taking 17% off the top. So not only do you have to outwit all the other bettors, but you've got to outwit them by such a big margin that, on average, you can afford to take 17% of your gross bets off the top and give it to the house before the rest of your money can be put to work. Given those mathematics, is it possible to beat the horses using only one's intelligence? Intelligence should give some edge because, Lots of people who don't know anything go out and bet lucky numbers and so forth. Therefore, somebody who really thinks about nothing but horse performance and is shrewd and mathematical could have a very considerable edge in the absence of the frictional cost caused by the house take. Unfortunately, what a shrewd horse player's edge does in most cases is to reduce his average loss over a season of betting from the 17% that he would lose if he got the average result to maybe 10%. However, there are actually a few people who can beat the game after paying the full 17%. I used to play poker when I was young with a guy who made a substantial living doing nothing but bet harness races. Now, harness racing is a relatively inefficient market. You don't have the depth of intelligence betting on harness races that you do on regular races. What my poker pal would do was to think about harness races as his main profession, and he would bet only occasionally when he saw some mispriced bet available. And by doing that, after paying the full handle to the house, which I presume was around 17%, he made a substantial living. If you stop to think about it, a parimutuel system is a market. Everybody goes there and bets, and the odds change based on what's bet. That's what happens in the stock market. You have to say that's rare. However, the market was not perfectly efficient. And if it weren't for that big 17% handle, lots of people would regularly be beating lots of other people at the horse races. It's efficient, yes, but it's not perfectly efficient. And with enough shrewdness and fanaticism, some people will get better results than others. The stock market is the same way, except that the house handle is so much lower. If you take transaction costs, the spread between the bid and the ask plus the commissions, and if you don't trade too actively, you're talking about fairly low transaction costs. So that, with enough fanaticism and enough discipline, some of the shrewd people are going to get way better results than average in the nature of things. The one thing all those winning bettors in the whole history of people who have beaten the parimutuel system have is quite simple. They bet very seldom. It is not a bit easy. And of course, 50% will end up in the bottom half, and 70% will end up in the bottom 70%. But some people will have an advantage. And in a fairly low transaction cost operation, they will get better than average results in stock picking. How do you get to be one of those who is a winner in a relative sense, instead of a loser? Here again, look at the parimutuel system. I had dinner last night by absolute accident with the president of Santa Anita. He says that there are 2 or 3 bettors who have a credit arrangement with the track, now that they have off-track betting, who are actually beating the house. The track is sending money out net after the full handle, a lot of it to Las Vegas, by the weight of people who are actually winning slightly, net, after paying the full handle. They're that shrewd about something with as much unpredictability as horse racing. It's not given to human beings to have such talent that they can just know everything about everything all the time. But it is given to human beings who work hard at it, who look and sift the world for a mispriced bet, that they can occasionally find one. And the wise ones bet heavily when the world offers them that opportunity. They bet big when they have the odds, and the rest of the time they don't. It's just that simple. The way to win is to work, 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 and hope to have a few insights. That is a very simple concept. And to me, it's obviously right based on experience, not only from the parimutuel system, but everywhere else. And yet, in investment management, practically nobody operates that way. We operate that way. I'm talking about Buffett and Munger. And we're not alone in the world. But a huge majority of people have some other crazy construct in their heads. And instead of waiting for a near cinch and loading up, They apparently ascribe to the theory that if they work a little harder or hire more business school students, they'll come to know everything about everything all the time. To me, that's totally insane. How many insights do you need? Well, I'd argue that you don't need many in a lifetime. If you look at Berkshire Hathaway and all of its accumulated billions, the top 10 insights account for most of it. And that's with a very brilliant man. Warren's a lot more able than I am, and very disciplined, devoting his lifetime to it. I don't mean to say that he's only had 10 insights. I'm just saying that most of the money came from 10 insights. So you can get very remarkable investment results if you think more like a winning parimutuel player. Just think of it as a heavy odds against game full of bullshit and craziness, with an occasional mispriced something or other. And you're probably not going to be smart enough to find thousands in a lifetime. And when you get a few, you really load up. It's just that simple. When Warren lectures at business schools, he says, "I could improve your ultimate financial welfare by giving you a ticket with only 20 slots in it so that you had 20 punches representing all the investments that you got to make in a lifetime. And once you'd punch through the card, you couldn't make any more investments at all." He says, under those rules, you'd really think carefully about what you did, and you'd be forced to load up on what you'd really thought about. So you'd do so much better. Again, this is a concept that seems perfectly obvious to me. And to Warren, it seems perfectly obvious. But this is one of the very few B-ussiness classes in the United States wherein Body will be saying so. It just isn't the conventional wisdom. To me, it's obvious that the winner has to be very selective. It's been obvious to me since very early in life. I don't know why it's not obvious to very many other people. I think the reason why we sought into such idiocy in investment management is best illustrated by a story that I tell about the guy who sold fishing tackle. I asked him, "My God, they're purple and green. Do fish really take these lures?" And he said, "Mister, I don't sell to fish." Investment managers are in the position of that fishing tackle salesman. They're like the guy who was selling salt to the guy who already had too much salt. And as long as the guy will buy salt, why, they'll sell salt. But that isn't what ordinarily works for the buyer of investment advice. If you invested Berkshire Hathaway style, it would be hard to get paid as an investment manager as well as they're currently paid, because you'd be holding a block of Walmart and a block of Coca-Cola and a block of something else. You'd be sitting on your ass. And the client would be getting rich. And after a while, the client would think, "Why am I paying this guy 0.5% a year on my wonderful passive holdings?" So what makes sense for the investor is different from what makes sense for the manager. And as usual in human affairs, what determines the behavior are incentives for the decision maker. As usual in human affairs, what determines the behavior are incentives for the decision maker. And getting the incentives right is a very, very important lesson. From all business, my favorite case on incentives is Federal Express. The heart and soul of its system, which creates the integrity of the product, is having all its airplanes come to one place in the middle of the night and shift all the packages from plane to plane. If there are delays, the whole operation can't deliver a product full of integrity to Federal Express customers. And it was always screwed up. They could never get it done on time. They tried everything, moral suasion, threats, you name it. And nothing worked. Finally, somebody got the idea to pay all these people not so much an hour, but so much a shift, and when it's all done, they can all go home. Well, their problems cleared up overnight. So getting the incentives right is a very, very important lesson. It was not obvious to Federal Express what the solution was. But maybe now, it will hereafter more often be obvious to you. All right, we've now recognized that the market is efficient as a parimutuel system is efficient, with the favorite more likely than the long shot to do well in racing, but not necessarily give any betting advantage to those that bet on the favorite. Yep. In the stock market, some railroad that's beset by better competitors and tough unions may be available at one-third of its book value. In contrast, IBM in its heyday might be selling at 6 times book value. So it's just like the parimutuel system. Any damn fool could plainly see that IBM had better business prospects than the railroad. But once you put the price into the formula, it wasn't so clear anymore what was going to work best for a buyer choosing between the stocks. So it's a lot like a parimutuel system. And therefore, it gets very hard to beat. What style should the investor use as a picker of common stocks in order to try to beat the market, in other words, to get an above-average long-term result? A standard technique that appeals to a lot of people is called sector rotation. You simply figure out when oils are going to outperform retailers, etc., etc., etc. You just kind of flit around being in the hot sector of the market, making better choices than other people. And presumably, over a long period of time, you get ahead. However, I know of no really rich sector rotator. Maybe some people can do it, I'm not saying they can't. All I know is that all the people I know who got rich, and I know a lot of them, did not do it that way. The second basic approach is the one that Ben Graham used, admired by Warren and me. As one factor, Graham had this concept of value to a private owner, what the whole enterprise would sell for if it were available. And that was calculable in many cases. Then, if you could take the stock price and multiply it by the number of shares and get something that was one-third or less of sellout value, he would say that you've got a lot of edge going for you. Even with an elderly alcoholic running a stodgy business, this significant excess of real value per share working for you means that all kinds of good things can happen to you. You had a huge margin of safety, as he put it, by having this big excess value going for you. But he was, by and large, operating when the world was in shell shock from the 1930s, which was the worst contraction in the English-speaking world in about 600 years. When in Liverpool, I believe, got down to something like a 600-year low, adjusted for inflation. People were so shell-shocked for a long time thereafter that Ben Graham could run his Geiger counter over this detritus from the collapse of the 1930s and find things selling below their working capital per share and so on. And in those days, working capital actually belonged to the shareholders. If the employees were no longer useful, you just sacked them all, took the working capital and stuck it in the owner's pockets. That was the way capitalism then worked. Nowadays, of course, the accounting is not realistic, because the minute the business starts contracting, significant assets are not there. Under social norms and the new legal rules of the civilization, so much is owed to the employees that the minute the enterprise goes into reverse, some of the assets on the balance sheet aren't there anymore. Now, that might not be true if you run a little auto dealership yourself. You may be able to run it in a way that there's no health plan and that's so that if the business gets lousy, you can take your working capital and go home. But IBM can't, or at least didn't. Just look at what disappeared from its balance sheet when it decided that it had to change size, both because the world had changed technologically and because its market position had deteriorated. And in terms of blowing it, IBM is some example. Those were brilliant, disciplined people. But there was enough turmoil in technological change that IBM got bounced off the wave after surfing successfully for 60 years. And that was some collapse, an object lesson in the difficulties of technology, and one of the reasons why Buffett and Munger don't like technology very much. We don't think we're any good at it, and strange things can happen. Benjamin Graham, 1894–1976. Born in London, Benjamin Graham migrated with his family to America when he was very young. His father opened an importing business that quickly failed. Despite the challenges of poverty, Graham attended and graduated from Columbia University. He took a job as a chalker on Wall Street with Neuberger, Henderson, and Loeb. His intelligence and capability were soon apparent, and by age 25, he was a partner at the firm. The 1929 market crash almost wiped out Graham, but he learned valuable lessons about investing. In the 1930s, Graham published a series of books on investing that became classics. Among these impressive titles are Security Analysis and The Intelligent Investor. Graham introduced the concept of intrinsic value and the wisdom of buying stocks at a discount to that value. At any rate, the trouble with what I call the classic Ben Graham concept is that gradually the world wised up, and those real obvious bargains disappeared. You could run your Geiger counter over the rubble, and it wouldn't click. But such is the nature of people who have a hammer to whom, as I mentioned, every problem looks like a nail, that the Ben Graham followers responded by changing the calibration on their Geiger counters. In effect, they started defining a bargain in a different way. And they kept changing the definition so that they could keep doing what they'd always done. And it still worked pretty well. So the Ben Graham intellectual system was a very good one. Of course, the best part of it all was his concept of Mr. Market. Instead of thinking the market was efficient, Graham treated it as a manic depressive who comes by every day. And some days Mr. Market says, "I'll sell you some of my interest for way less than you think it's worth." And other days he comes by and says, "I'll buy your interest at a price that's way higher than you think it's worth." And you get the option of deciding whether you want to buy more, sell part of what you already have, or do nothing at all. To Graham, it was a blessing to be in business with a manic depressive who gave you this series of options all the time. That was a very significant mental construct. And it's been very useful to Buffett, for instance, over his whole adult lifetime. However, if we'd stayed with classic Graham the way Ben Graham did it, we would never have had the record we have. And that's because Graham wasn't trying to do what we did. Perhaps the Soviets had this German proverb in mind when they selected the hammer for their revolutionary symbol: one must either be the hammer or the anvil. For example, Graham didn't want to ever talk to management. And his reason was that, like the best sort of professor aiming his teaching at a mass audience, he was trying to invent a system that anybody could use. And he didn't feel that the man in the street could run around and talk to management and learn things. He also had a concept that management would often couch the information very shrewdly to mislead. Therefore, it was very difficult. And that is still true, of course, human nature being what it is. And so, having started out as Grahamires, which, by the way, worked fine, we gradually got what I would call better insights. And we realized that some company that was selling at 2 or 3 times book value could still be a hell of a bargain because of momentums implicit in its position, sometimes combined with an unusual managerial skill plainly present in some individual or other, or some system or other. And once we'd got over the hurdle of recognizing that a thing could be a bargain based on quantitative measures that would have horrified Graham, we started thinking about better businesses. And by the way, the bulk of the billions in Berkshire Hathaway has come from the better businesses. Much of the first $200 or $300 million came from scrambling around with our Geiger counter. But the great bulk of the money has come from the great businesses. Most investment managers are in a game where the clients expect them to know a lot about a lot of things. We didn't have any clients who could fire us at Berkshire Hathaway. And even some of the early money was made by being temporarily present in great businesses. Buffett Partnership, for example, owned American Express and Disney when they got pounded down. Most investment managers are in a game where the clients expect them to know a lot about a lot of things. We didn't have any clients who could fire us at Berkshire Hathaway. So we didn't have to be governed by any such construct. And we came to this notion of finding a mispriced bet and loading up when we were very confident that we were right. So we were way less diversified. And I think our system is miles better. However, in all fairness, I don't think a lot of money managers could successfully sell their services if they used our system. But if you're investing for 40 years in some pension fund, what difference does it make if the path from start to finish is a little more bumpy or a little different than everybody else's, so long as it's all going to work out well in the end? So what if there's a little extra volatility? In investment management today, everybody wants not only to win, but to have the path never diverge very much from a standard path except on the upside. Well, that is a very artificial, crazy construct. That's the equivalent in investment management to the custom of binding the feet of the Chinese women. It's the equivalent of what Nietzsche meant when he criticized the man who had a lame leg and was proud of it. That is really hobbling yourself. Now investment managers would say, we have to be that way. That's how we're measured. And they may be right in terms of the way the business is now constructed. But from the viewpoint of a rational consumer, the whole system's bonkers and draws a lot of talented people into socially useless activity. You're much more likely to do well if you start out to do something feasible instead of something that isn't feasible. Isn't that perfectly obvious? And the Berkshire system is not bonkers. It's so damned elementary that even bright people are going to have limited, really valuable insights in a very competitive world when they're fighting against other very bright, hardworking people. And it makes sense to load up on the very few good insights you have instead of pretending to know everything about everything at all times. You're much more likely to do well if you start out to do something feasible instead of something that isn't feasible. Isn't that perfectly obvious? How many of you have 56 brilliant insights in which you have equal confidence? Raise your hands, please. How many of you have 2 or 3 insights that you have some confidence in? I rest my case. I'd say that Berkshire Hathaway's system is adapting to the nature of the investment problem, as it really is. We've really made the money out of high-quality businesses. In some cases, we bought the whole business. And in some cases, we just bought a big block of stock. But when you analyze what happened, the big money's been made in the high-quality businesses. And most of the other people who have made a lot of money have done so in high-quality businesses. Over the long term, it's hard for a stock to earn a much better return than the business which underlies it earns. If the business earns 6% on capital over 40 years, and you hold it for that 40 years, you're not going to make much different than a 6% return, even if you originally buy it at a huge discount. Conversely, if a business earns 18% on capital over 20 or 30 years, even if you pay an expensive-looking price, you'll end up with one hell of a result. So the trick is getting into better businesses. And that involves all of these advantages of scale that you could consider momentum effects. How do you get into these great companies? One method is what I'd call the method of finding them small get M when they're little. For example, buy Walmart when Sam Walton first goes public and so forth. And a lot of people try to do just that. And it's a very beguiling idea. If I were a young man, I might actually go into it. But it doesn't work for Berkshire Hathaway anymore because we've lot too much money. We can't find anything that fits our size parameter that way. Besides, we're set in our ways. But I regard finding them small as a perfectly intelligent approach for somebody to try with discipline. It's just not something that I've done. Finding 'em big, obviously, is very hard because of the competition. So far, Berkshire's managed to do it. But can we continue to do it? What's the next Coca-Cola investment for us? Well, the answer to that is I don't know. I think it gets harder for us all the time. And ideally, and we've done a lot of this, you get into a great business which also has a great manager because management matters. For example, it's made a hell of a difference to General Electric that Jack Welch came in instead of the guy who took over Westinghouse. One hell of a difference. So management matters too. And some of it is predictable. I do not think it takes a genius to understand that Jack Welch was a more insightful person and a better manager than his peers in other companies. Nor do I think it took tremendous genius to understand that Disney had basic momentums in place that are very powerful, and that Eisner and Wells were very unusual managers. So you do get an occasional opportunity to get into a wonderful business that's being run by a wonderful manager. And of course, that's hog heaven day. If you don't load up when you get those opportunities, it's a big mistake. Occasionally, you'll find a human being who's so talented that he can do things that ordinary skilled mortals can't. I would argue that Simon Marx, who was second generation in Marks and Spencer of England, was such a man. Patterson was such a man at National Cash Register. And Sam Walton was such a man. These people do come along, and in many cases, they're not all that hard to identify. If they've got a reasonable handwidth, the fanaticism and intelligence, and so on that these people generally bring to the party, then management can matter much. However, averaged out, betting on the quality of a business is better than betting on the quality of management. In other words, if you have to choose one, bet on the business momentum, not the brilliance of the manager. But very rarely, you find a manager who's so good that you're wise to follow him into what looks like a mediocre business. Another very simple effect I very seldom see discussed either by investment managers or anybody else is the effect of taxes. If you're going to buy something that compounds for 30 years at 15% per annum, and you pay 135% tax at the very end, the way that works out is that after taxes, you keep 13.3% per annum. 222. Trying to minimize taxes too much is one of the great standard causes of really dumb mistakes. In contrast, if you bought the same investment but had to pay taxes every year of 35% out of the 15% that you earned, then your return would be 15% minus 35% of 15% or only 9.75% per year compounded. So the difference there is over 3.5%. And what 3.5% does to the numbers over long holding periods like 30 years is truly eye-opening. If you sit on your ass for long stretches in great companies, you can get a huge edge from nothing but the way income taxes work. Even with a 10% per annum investment, paying a 35% tax at the end gives you 8.3% after taxes as an annual compounded result after 30 years. In contrast, if you pay the 35% each year instead of at the end, your annual result goes down to 6.5%. So you add nearly 2% of after-tax return per annum if you only achieve an average return by historical standards from common stock investments in companies with low dividend payout ratios. But in terms of business mistakes that I've seen over a long lifetime, I would say that trying to minimize taxes too much is one of the great standard causes of really dumb mistakes. I see terrible mistakes from people being overly motivated by tax considerations. Yet, Warren and I personally don't drill oil wells. We pay our taxes, and we've done pretty well so far. Anytime somebody offers you a tax shelter from here on in life, my advice would be don't buy it. Yet, In fact, anytime anybody offers you anything with a big commission and a 200-page prospectus, don't buy it. Occasionally, you'll be wrong if you adopt Munger's rule. However, over a lifetime, you'll be a long way ahead, and you will miss a lot of unhappy experiences that might otherwise reduce your love for your fellow man. There are huge advantages for an individual to get into a position where you make a few great investments and just sit on your ass. You're paying less to brokers. You're listening to less nonsense. And if it works, the governmental tax system gives you an extra 1, 2, or 3 percentage points per annum compounded. And you think that most of you are going to get that much advantage by hiring investment counselors and paying them 1% to run around, incurring a lot of taxes on your behalf. Lots of luck. We pay our taxes. Berkshire's Christmas present for Uncle Sam. On my right, Berkshire 2004 Federal Tax Return L0249 pages and $3 billion plus total tax. In my left hand, the tax return I filed at age 13 showing a total tax of $7. Buffett. Warren and I personally don't drill oil wells. We pay our taxes, and we've done pretty well so far. Anytime somebody offers you a tax shelter from here on in life, my advice would be don't buy it. Munger. Are there any dangers in this philosophy? Yes. Everything in life has dangers. Since it's so obvious that investing in great companies works, it gets horribly overdone from time to time. In the nifty 50 days, everybody could tell which companies were the great ones. So they got up to 50, 60, and 70 times earnings. And just as IBM fell off the wave, other companies did too. Thus, a large investment disaster resulted from too high prices. And you've got to be aware of that danger. So there are risks. Nothing is automatic and easy. But if you can find some fairly priced great company and buy it that tends to work out very, very well indeed, especially for an individual. Within the growth stock model, there's a subposition. There are actually businesses that you will find a few times in a lifetime where any manager could raise the return enormously just by raising prices, and here they haven't done it. So they have huge untapped pricing power that they're not using. That is the ultimate no-brainer. That existed in Disney. It's such a unique experience to take your grandchild to Disneyland. You're not doing it that often. And there are lots of people in the country. And Disney found that it could raise those prices a lot, and the attendance stayed right up. So a lot of the great record of Eisner and Wells was utter brilliance, but the rest came from just raising prices at Disneyland and Disney World, and through video cassette sales of classic animated movies. At Berkshire Hathaway, Warren and I raised the prices of See's candy a little faster than others might have. And of course, we invested in Coca-Cola, which had some untapped pricing power. And it also had brilliant management. So Guzweta and Kyo could do much more than raise prices. It was perfect. You will get a few opportunities to profit from finding underpricing. There are actually people out there who don't price everything as high as the market will easily stand. And once you figure that out, it's like finding money in the street if you have the courage of your convictions. 225. If you look at Berkshire's investments where a lot of the money's been made and you look for the models, you can see that we twice bought into two newspaper towns, which have since become one newspaper towns. So we made a bet to some extent. Yet, we faced a situation where we had both the top hand in a game that was clearly going to end up with one winner, and a management with a lot of integrity and intelligence. It was a dream. An absolute damn dream. Yet, in one of those, the Washington Post, we bought it at about 20% of the value to a private owner. So we bought it on a Ben Graham-style basis, at 1/5 of obvious value, and in addition, we faced a situation where you had both the top hand in a game that was clearly going to end up with one winner and management with a lot of integrity and intelligence. That one was a real dream. They're very high-class people, the Catherine Graham family. That's why it was a dream, an absolute damn dream. Of course, that came about back in 73-74. And that was almost like 1932. That was probably a once-in-40 years type denouement in the markets. That investment's up about 50 times over our cost. If I were you, I wouldn't count on getting any investment in your lifetime quite as good as the Washington Post was in 73 and 74. Let me mention another model. Of course, Gillette and Coke make fairly low-priced items and have a tremendous marketing advantage all over the world. And in Gillette's case, they keep surfing along new technology, which is fairly simple by the standards of microchips. But it's hard for competitors to do. So they've been able to stay constantly near the edge of improvements in shaving. There are whole countries where Gillette has more than 90% of the shaving market. GEICO is a very interesting model. It's another one of the 100 or so models you ought to have in your head. I've had many friends in the sick business fix game over a long lifetime, and they practically all use the following formula. I call it the cancer surgery formula. They look at this mess, and they figure out if there's anything sound left that can live on its own if they cut away everything else. And if they find anything sound, they just cut away everything else. Of course, if that doesn't work, they liquidate the business. But it frequently does work. And GEICO had a perfectly magnificent business in a mess, but still working. Misled by success, GEICO had done some foolish things. They got to thinking that, because they were making a lot of money, they knew everything. And they suffered huge losses. All they had to do was to cut out all the folly and go back to the perfectly wonderful business that was lying there. And when you think about it, that's a very simple model. And it's repeated over and over again. And in GEICO's case, think about all the money we passively made. It was a wonderful business combined with a bunch of foolishness that could easily be cut out. And people were coming in who were temperamentally and intellectually designed, so they were going to cut it out. That is a model you want to look for. And you may find one or two or three in a long lifetime that are very good. And you may find 20 or 30 that are good enough to be quite useful. Finally, I'd like to once again talk about investment management. That is a funny business, because on a net basis, the whole investment management business together gives no value added to all buyers combined. That's the way it has to work. On a net basis, the whole investment management business together gives no value added to all buyers combined. That's the way it has to work. Of course, that isn't true of plumbing, and it isn't true of medicine. If you're going to make your careers in the investment management business, you face a very peculiar situation. And most investment managers handle it with psychological denial, just like a chiropractor. That is the standard method of handling the limitations of the investment management process. But if you want to live the best sort of life, I would urge each of you not to use the psychological denial mode. I think a select few or small percentage of the investment managers can deliver value added. But I don't think brilliance alone is enough to do it. I think that you have to have a little of this discipline of calling your shots and loading up if you want to maximize your chances of becoming one who provides above average real returns for clients over the long pull. But I'm just talking about investment managers engaged in common stock picking. I am agnostic elsewhere. I think there may well be people who are so shrewd about currencies and this, that, and the other thing that they can achieve good long-term records operating on a pretty big scale in that way. But that doesn't happen to be my milieu. I'm talking about stock picking in American stocks. I think it's hard to provide a lot of value added to the investment management client, but it's not impossible. A letter from USC finance professor Guilford Babcock, shown below and left, sharing with Charlie one of his student reactions to the talk. Worldly wisdom as it relates to investment management and business. I thought the interview with Munger was brilliant. It totally grabbed my attention when he challenged us to make only 20 investments in a lifetime. It changes your perception of an investment when what is at stake becomes more. We marriage unless we date. Perhaps with that article in mind, I will dive a little more deeper to make sure my investments are good ones. Nothing to add. Number 3. We continue with this question, occasioned by countless questions over the years at cocktail parties, etc. Question: all kinds of people ask me for some foolproof system for achieving financial security or saving for their retirement. I try to dodge those questions. Editor: but this time, Charlie, we're not going to let you dodge it. Answer: spend less than you make. Always be saving something. Put it into a tax-deferred account. Over time, it will begin to amount to something. This is such a no-brainer. Talk 2 Revisited. As I reviewed Talk 2 in 2006, I thought it would be improved by adding 1. An attempt to explain the extreme investment success of Harvard and Yale in recent years plus 2. A prediction about outcomes for the many pools of capital that will now try to duplicate the past success of Harvard and Yale by copying or continuing their methods. Plus 3. A brief comment about implications for the efficient market hypothesis as demonstrated in a 2005 book, Fortune's Formula, by William Poundstone. To me, it seems likely that, as Harvard and Yale de-emphasized conventional unleveraged holding of diversified U.S. common stocks, their investment success was boosted by factors including the 4 described below. 1. By investing in LBO funds, Harvard and Yale introduced leverage into their results from owning interests in U.S. businesses. And the LBO fund structure gave them a way to make their leveraged business investments in a manner safer than is possible in a normal margin account, prone during panics forced sales. Decent comparative results often followed in markets with tolerable general outcomes. And this happened even when net after-cost results from investments in the LBO funds were no better than would have occurred through only slightly leveraged investment in an index of U.S. stocks. 2. In category after category, Harvard and Yale selected or directly employed investment managers who were way above average in ability, providing additional evidence that investment markets are not perfectly efficient and that some good investment results come from abnormal skill or other abnormal advantage. As one example, Harvard and Yale, by reason of their own prestige, were able to get into some of the most profitable high-tech venture capital funds, not available to all other investors. These funds, using momentum provided by their own past success, had an opportunity advantage over less well-established venture capital operations, in that the best entrepreneurs, quite logically, made early presentations to the best-regarded funds. 3. Harvard and Yale wisely and opportunistically imitated investment banking firms by going into several activities that were then non-traditional, like investing in distressed U.S. corporate bonds and high-coupon foreign bonds and leveraged fixed income arbitrage. During a period when many good opportunities were available to skilled operators in the activities chosen. 4. Finally, the benefits that came to Harvard and Yale in recent years through leverage and unconventionality were often, of course, given a large tailwind by a happy combination of declining interest rates and rising price-earnings ratios for stocks. 232. The extreme investment success of Harvard and Yale gives me both pleasure and pain. My pleasure comes from this demonstration that academic skill is often useful in worldly affairs. People like me who were attracted by academia, yet have gone into business, naturally respond to such worldly achievement much like the many modern scientists who relish the example of Thales of Miletus. This scientist of antiquity made a large profit by leasing most of the olive presses in his area just before the occurrence of a particularly bountiful harvest. My pain comes from 1. Foreseeing a lot of future adversity for other worthy institutions, driven by envy and salesmen into enthusiastic imitation of Harvard and Yale, and 2. Disapproval of the conduct of many of the salesmen likely to succeed in pushing the imitation. Something similar to what I fear happened near the end of the high-tech bubble. At that time, envy of successful early-stage, high-tech venture capital investors like Stanford, plus dubious sales methods of many venture capitalists, caused about $90 billion to rush into low-quality, imitative early-stage ventures that by now may have created as much as $45 billion in net losses for late-coming investors. Moreover, Harvard and Yale may now need new displays of unconventional wisdom that are different from their last displays. It is quite counterintuitive to decrease that part of one's activity that has recently worked best. But this is often a good idea. And so also with reducing one's perception of one's needs, instead of increasing risks in an attempt to satisfy perceived needs. Talk 2 was made in 1994, about 12 years before this addendum was written. And during that 12 years, much useful thought and data collection has supported the idea that neither securities markets nor parimutuel betting systems at race tracks prevent some venturers from gaining highly satisfactory, way above average results through unusual skill. William Poundstone's book, Fortune's Formula, collects much of the modern evidence on this point in a highly entertaining way. Moreover, the book contains an account of the Lollapalooza investment record of Claude Shannon, pioneer scientist in information theory, that makes Shannon's methods look much like those of Charlie Munger. Worldly Wisdom Updated, O&A with Charlie. How do you and Warren evaluate an acquisition candidate? We're light on financial yardsticks. We apply lots of subjective criteria. Can we trust management? Can it harm our reputation? What can go wrong? Do we understand the business? Does it require capital infusions to keep it going? What is the expected cash flow? We don't expect linear growth. Cyclicality is fine with us as long as the price is appropriate. What should a young person look for in a career? I have 3 basic rules. Meeting all 3 is nearly impossible, but you should try anyway. Don't sell anything you wouldn't buy yourself. Don't work for anyone you don't respect and admire. Work only with people you enjoy. I have been incredibly fortunate in my life. With Warren, I had all 3. What overall life advice do you have for young people? Spend each day trying to be a little wiser than you were when you woke up. Discharge your duties faithfully and well. Step by step you get ahead, but not necessarily in fast spurts. but you build discipline by preparing for fast spurts. Slug it out 1 inch at a time, day by day, and at the end of the day, if you live long enough like most people, you will get out of life what you deserve. Life in its various passages can be hard, brutally hard. The 3 things I have found helpful in coping with its challenges are: have low expectations, have a sense of humor, surround yourself with the love of friends and family. Above all, live with change and adapt to it. If the world didn't change, I'd still have a 12 handicap. You don't have to be brilliant, only a little bit wiser than the other guys on average for a long, long time. This talk was given in 1996 to the students of Professor William C. Lazier, who was the Nancy and Charles Munger Professor of Business at Stanford University Law School. Because this talk published in Outstanding Investor Digest on December 29, 1997, and March 13, 1998 repeats many of the ideas and much of the language included in other talks, particularly Practical Thought about Practical Thought. Your editor has abridged certain passages and added comments to maintain the logic and flow of the speech. Even with the abridgments, this talk includes many unique ideas as well as familiar ones expressed in novel ways. Talk 3. A Lesson on Elementary, Worldly Wisdom, Revisited Stanford Law School. April 19, 1996. What I'm going to try to do today is to extend the remarks I made 2 years ago at the USC Business School. You were assigned a transcript of my USC talk, and there's nothing I said then that I wouldn't repeat today. But I want to amplify what I said then. It's perfectly clear that if Warren Buffett had never learned anything new after graduating from the Columbia Business School, Berkshire would be a pale shadow of its present self. Warren would have gotten rich, because what he learned from Ben Graham at Columbia was enough to make anybody rich. But he wouldn't have the kind of enterprise Berkshire Hathaway is if he hadn't kept learning. How do you get worldly wisdom? What system do you use to rise into the tiny top percentage of the world, in terms of having sort of an elementary practical wisdom? I've long believed that a certain system, which almost any intelligent person can learn, works way better than the systems that most people use. As I said at the USC Business School, what you need is a latticework of mental models in your head. And you hang your actual experience and your vicarious experience that you get from reading and so forth on this latticework of powerful models. And with that system, things gradually get to fit together in a way that enhances cognition. Charlie discusses several of the specific mental models elaborated in other talks. Your assigned reading for today included the latest annual letters from Jack Welch and Warren Buffett relating to General Electric and Berkshire Hathaway, respectively. Jack Welch has a Ph.D. in engineering, and Warren plainly could have gotten a Ph.D. in any field he wanted to pursue. And both gentlemen are inveterate teachers. Worldly wisdom is clearly academic when you get right down to it. Look at what General Electric has achieved and, for that matter, what Berkshire Hathaway has achieved. Of course, Warren had a professor mentor, Ben Graham, for whom he had a great affection. Graham was so academic that, when he graduated from Columbia, 3 different academic departments invited him into their Ph.D. programs and asked him to start teaching immediately as part of the Ph.D. program, those 3 departments being literature, Greek and Latin classics, and mathematics. Graham had a very academic personality. I knew him. He was a lot like Adam Smith, very preoccupied, very brilliant. He even looked like an academic. And he was a good one. And Graham, without ever really trying to maximize the gaining of wealth, died rich, Even though he was always generous and spent 30 years teaching at Columbia and authored or co-authored the best textbooks in his field. So I would argue that academia has a lot to teach about worldly wisdom, and that the best academic values really work. Of course, when I urge a multidisciplinary approach, that you've got to have the main models from a broad array of disciplines, and you've got to use them all. I'm really asking you to ignore jurisdictional boundaries. And the world isn't organized that way. It discourages the jumping of jurisdictional boundaries. Big bureaucratic businesses discourage it. And of course, academia itself discourages it. All I can say there is that, in that respect, academia is horribly wrong and dysfunctional. And some of the worst dysfunctions in businesses come from the fact that they balkanize reality into little individual departments with territoriality and turf protection, and so forth. So if you want to be a good thinker, you must develop a mind that can jump the jurisdictional boundaries. You don't have to know it all. Just cake in the best big ideas from all these disciplines. And it's not that hard to do. I might try and demonstrate that point by using the analogy of the card game of contract bridge. Suppose you want to be good at declare or play in contract bridge. Well, you know the contract, you know what you have to achieve. And you can count up the sure winners you have by laying down your high cards and your invincible trumps. But if you're a trick or two short, how are you going to get the other needed tricks? Well, there are only 6 or so different standard methods. You've got long suit establishment. You've got finesses. You've got throw-in plays. You've got cross roughs. You've got squeezes. And you've got various ways of misleading the defense into making errors. So it's a very limited number of models. But if you only know 1 or 2 of those models, then you're going to be a horse's paddoot in declare or play. Furthermore, these things interact. Therefore, you have to know how the models interact. Otherwise, you can't play the hand right. Similarly, I've told you to think forward and backward. Well, great declarers in bridge think, how can I take the necessary winners? But they think it through backwards too. They also think, what could possibly go wrong that could cause me to have too many losers? And both methods of thinking are useful. So to win in the game of life, get the needed models into your head and think it through forward and backward. What works in bridge will work in life. That contract bridge is so out of vogue in your generation is a tragedy. China is way smarter than we are about bridge. They're teaching bridge in grade school now. And God knows the Chinese do well enough when introduced to capitalist civilization. If we compete with a bunch of people chat really know how to play bridge when our people don't, it'll be just one more disadvantage we don't need. Since your academic structure, by and large, doesn't encourage minds jumping jurisdictional boundaries, you're at a disadvantage because, in that one sense, even though academia is very useful to you, you've been mistaught. My solution for you is one that I got at a very early age from the nursery, the story of the little red hen. The punch line, of course, is, "Then I'll do it myself," said the little red hen. "Then I'll do it myself," said the little red hen. So if your professors won't give you an appropriate multidisciplinary approach, if each wants to overuse his own models and underuse the important models in other disciplines, you can correct that folly yourself. Just because he's a horse's paddoot, you don't have to be one too. You can reach out and grasp the model that better solves the overall problem. All you have to do is know it and develop the right mental habits. And it's kind of fun to sit there and outthink people who are way smarter than you are because you've trained yourself to be more objective and multidisciplinary. Furthermore, there's a lot of money in it, as I can testify from my own personal experience. Charlie begins the Coca-Cola business case retailed in Talk 4, Practical Thought about Practical Thought, and discusses the importance of flavor. One of my favorite business stories comes from Hershey. They get their flavor because they make their cocoa butter in old stone grinders that they started with in the 1800s in Pennsylvania. And a little bit of the husk of the cocoa bean winds up in the chocolate. Therefore, they get that odd flavor that people like in Hershey's chocolate. Hershey knew enough when they wanted to expand into Canada to know they shouldn't change their winning flavor. Hershey knew enough when they wanted to expand into Canada to know they shouldn't change their winning flavor. Therefore, they copied their stone grinders. Well, it took them 5 years to duplicate their own flavor. As you can see, flavors can be quite tricky. 240. Even today, there's a company called International Flavors and Fragrances. It's the only company I know that does something on which you can't get a copyright or a patent, but which nevertheless receives a permanent royalty. They manage to do that by helping companies develop flavors and aromas in their trademarked products like shaving cream. The slight aroma of shaving cream is very important to consumption. So all of this stuff is terribly important. Continuing the Coca-Cola case study, Charlie explains how our understanding of graphic replications of mathematical ideas are rooted in biology. My friend Dr. Nat Meewald, who's the Chief Technology Officer at Microsoft, is bothered by this. He's a Ph.D. physicist and knows a lot of math. And it disturbs him that biology could create a neural apparatus that could do automatic differential equations at fast speed and yet, everywhere he looks, people are total klutzes at dealing with ordinary probabilities and ordinary numbers. By the way, I think Meewald's wrong to be amazed by that. The so-called fitness landscape of our ancestors forced them to know how to throw spears, run around, turn corners, and what have you long before they had to think correctly like Meewald. So I don't think he should be so surprised. However, the difference is so extreme that I can understand how he finds it incongruous. Mankind invented a system to cope with the fact that we are so intrinsically lousy at manipulating numbers. It's called the graph. At any rate, mankind invented a system to cope with the fact that we are so intrinsically lousy at manipulating numbers. It's called the graph. Oddly enough, it came out of the Middle Ages. And it's the only intellectual invention of the monks during the Middle Ages I know of that's worth a damn. The graph puts numbers in a form that looks like motion. So it's using some of this primitive neural stuff in your system in a way that helps you understand it. So the value line graphs are very useful. The graph I've distributed is on log paper, which is based on the natural table of logarithms. And that's based on the elementary mathematics of compound interest, which is one of the most important models there is on Earth. So there's a reason why that graph is in that form. And if you draw a straight line through data points on a graph on log paper, it will tell you the rate at which compound interest is working for you. So these graphs are marvelously useful. I don't use value lines predictions because our system works better for us than theirs. In fact, a lot better. But I can't imagine not having their graphs and their data. It's a marvelous, marvelous product. Charlie discusses the importance of trademarks to Coca-Cola's success and carries it over to a discussion of food products and Carnation. Carnation Company. In 1899, grocer E.A. Stewart founded the Pacific Coast Condensed Milk Company in the state of Washington, based on the relatively new process of evaporation. Using a local tobacconist's store name, Carnation, he had a brand for his new milk product. Through attention to processes and clever marketing, Carnation became associated with its contented cows and high-quality milk products. In 1985, the company was acquired by Nestle. Now when Carnation tried to make a deal for its trademark, there was this one guy who sold Carnation fish. So help me God, that was his trade name. Don't ask me why. And every time they'd say, "We'll pay you $250,000, he'd say, "I want $400,000. And then 4 years later they'd say, "We'll give you $1 million, and he'd say, "I want $2 million. And they just kept doing that all the way through. And they never did buy the trademark, at least. They hadn't bought it the last time I looked. In the end, Carnation came to him sheep-facedly and said, "We'd like to put our quality control inspectors into your fish plants to make sure that your fish are perfect, and we'll pay all the costs," which he quickly and smirkily allowed. So he got free quality control in his fish plants courtesy of the Carnation Company. This history shows the enormous incentive you create if you give a guy a trademark he can protect. And this incentive is very useful to the wider civilization. As you see, Carnation got so that it was protecting products that it didn't even own. That sort of outcome is very, very desirable for society. So there are some very fundamental macroeconomic reasons why even communist countries should protect trademarks. They don't all do it, but there are very powerful reasons why they should. And by and large, averaged out around the world, trademark protection been pretty good. Charlie applies various mental models to Coca-Cola. However, if you don't have the basic models and the basic mental methods for dealing with the models, then all you can do is to sit there twiddling your thumbs as you look at the value line graph. But you don't have to twiddle your thumbs. You've got to learn 100 models and a few mental tricks and keep doing it all of your life. It's not that hard. And the beauty of it is that most people won't do it, partly because they've been miseducated. And I'm here trying to help you avoid some of the perils that might otherwise result from that miseducation. Okay. We've been through some of the general ideas in the search for worldly wisdom. And now I want to turn to something even more extreme and peculiar than the talk I've already given you. Of all the models that people ought to have in useful form and don't, perhaps the most important lie in the area of psychology. I recently had an instructive experience. I just returned from Hong Kong. I have a pal there who's a headmaster of one of the leading schools. He gave me this book called The Language Instinct, written by Steven Pinker. Well, Pinker is a semanticist professor who rose in the shadow of Noam Chomsky Linguistics Institute professor at MIT who is probably the greatest semanticist who ever lived. Steven Pinker, b. 1954. Born in Montreal. Steven Pinker earned a degree in experimental psychology at McGill University and then moved on to Harvard for his doctorate. He has taught at Harvard and MIT at various times and is currently the Johnstone Family Professor in the Department of Psychology at Harvard. Pinker is interested in language and the mind, including the field of visual cognition. That field encompasses the ability to imagine shapes and recognize faces and objects. He specializes in language development in children and has written many important papers and books on this and other topics. And Pinker says that human language ability is not just learned, it's deeply buried to a considerable extent in the genome. It's not in the genome of the other animals, including the chimpanzee, to any really useful extent. It's a gift that came to humans. And Pinker proves his point pretty well. Of course, Chomsky's already proven it. You have to be pretty ignorant not to realize that a good deal of language ability is right there in the human genome. And even though you have to work like hell to improve it through education, you start with a big leg up in your genes. Pinker can't understand why Chomsky, who, again, is such a genius takes the position that the jury's still out about why this ability is in the human genome. Pinker in effect says, like hell the jury is still out. The language instinct got into humans in exactly the same way that everything else got there through Darwinian natural selection. Yet, the language instinct got into humans in exactly the same way that everything else got there through Darwinian natural selection. Yet, well, the junior professor is clearly right, and Chomsky's hesitation is a little daft. Yet, but if the junior professor and I are right, how has a genius like Chomsky made an obvious misjudgment? The answer is quite clear to me. Chomsky is passionately ideological. He is an extreme egalitarian leftist who happens to be a genius. And he's so smart that he realized that if he concedes this particular Darwinian point, the implications threaten his leftist ideology. So he naturally has his conclusion affected by his ideological bias. And that gets into another lesson in worldly wisdom. If ideology can screw up the head of Chomsky, imagine what it does to people like you and me. Heavy ideology is one of the most extreme distorters of human cognition. Look at these Islamic fundamentalists who just gunned down a bunch of Greek tourists shouting, "God's work." Ideology does some strange things and distorts cognition terribly. If you get a lot of heavy ideology young, and then you start expressing it, you are really locking your brain into a very unfortunate pattern. And you are going to distort your general cognition. There's a very interesting history if you take Warren Buffett as an example of worldly wisdom. Warren adored his father, who was a wonderful man. But Warren's father was a very heavy ideologue, right-wing. It happened to be, who hung around with other very heavy ideologues, right-wing, naturally. Warren observed this as a kid, and he decided that ideology was dangerous and that he was going to stay a long way away from it. And he has throughout his whole life. That has enormously helped the accuracy of his cognition. I learned the same lesson in a different way. My father hated ideology. Therefore, all I had to do was imitate my father, and thereby stay on what I regard as the right path. People like Dornan on the right or Nader on the left have obviously gone a little daft. They're extreme examples of what ideology will do to you, particularly violently expressed ideology. Since it pounds ideas in better than it convinces out, it's a very dangerous thing to do. If you get a lot of heavy ideology young, and then you start expressing it, you are really locking your brain into a very unfortunate pattern. Therefore, in a system of multiple models across multiple disciplines, I should add as an extra rule that you should be very wary of heavy ideology. You can have heavy ideology in favor of accuracy, diligence, and objectivity. But a heavy ideology that makes you absolutely sure that the minimum wage should be raised or that it shouldn't, and it's kind of a holy construct where you know you're right, makes you a bit nuts. This is a very complicated system, and life is one damn relatedness after another. It's all right to think that, on balance, you suspect that civilization is better if it lowers the minimum wage or raises it. Either position is okay. But being totally sure on issues like that with a strong, violent ideology, in my opinion, turns you into a lousy thinker. So beware of ideology-based mental misfunctions. Charlie laments how poorly the field of psychology deals with incentive-caused bias. Another reason that I mentioned Pinker, the semanticist who wrote the book that I told you about earlier, is that at the end of his book he says, roughly, "I've read the psychology textbooks, and they're daft." He says, this whole subject is misorganized and mistaught. Well, I have far less in the way of qualifications than Pinker. In fact, I've never taken a single course in psychology. However, I've come to exactly the same conclusion, that the psychology texts, while they are wonderful in part, are also significantly daft. In fact, just take simple psychological denial. About 3 centuries before the birth of Christ, Demosthenes said, "What a man wishes, that also will he believe." Well, Demosthenes was right. I had a family acquaintance whose much-loved son, who was brilliant and a star football player, flew off over the ocean and never came back. Well, his mother thought he was still alive. The mind will sometimes flip so that the wish becomes the belief. It will do so at various levels. Individuals vary in how much psychological denial they get. But miscognition from denial overwhelmingly pervades the reality that you're going to have to deal with. And yet, you won't find an adequate treatment of simple psychological denial in psychology texts. 246. Michael Faraday, 179 R1567. Famous for his investigations of physics, chemistry, and electricity, Michael Faraday's wisdom includes: nothing is too wonderful to be true. Work finish. Publish. His advice to the young William Crookes, later a famous chemist and physicist in his own right. The 5 essential entrepreneurial skills for success are concentration, discrimination, organization, innovation, and communication. Why, sir, there is every possibility that you will soon be able to tax it. To Prime Minister William Gladstone, on the usefulness of electricity. So you cannot learn psychology the way you are Professor Speech at you have got to learn everything they teach, but you have got to learn a lot more that they don't teach because they don't handle their own subject correctly. Psychology, to me, as currently organized, is electromagnetism after Faraday, but before Maxwell a lot has been discovered. But no one mind has put it all together in proper form, and it should be done because it would not be that hard to do, and it is enormously important. Just open a psychology text, turn to the index. Look up envy. Well, envy made it into 1 or 2 or 3 of the 10 commandments Moses knew all about. And we, the old Jews, when they were herding sheep, knew all about envy. It is just that psychology professors don't know about envy. Books that thick teaching a psychology course without envy, and with no simple psychological denial, and no incentive caused bias. And psychological tests don't deal adequately with combinations of factors. I told you earlier to be aware of the Lollapalooza effect, when 2 or 3 or more forces are operating in the same direction. Well, the single most publicized psychology experiment ever done is the Milgram experiment, where they asked people to apply what they had every reason to believe was heavy electrical torture on innocent fellow human beings. And they manipulated most of these decent volunteers into doing the torture. So you can learn psychology the way your professors teach it. You've got to learn everything they teach. But you've got to learn a lot more that they don't teach, because they don't handle their own subject correctly. Milgram performed the experiment right after Hitler had gotten a bunch of believing Lutherans, Catholics, and so forth to perform unholy acts they should have known were wrong. He was trying to find out how much authority could be used to manipulate high-grade people into doing things that were clearly and grossly wrong. And he got a very dramatic effect. He managed to get high-grade people to do many awful things. But for years, it was in the psychology books as a demonstration of authority, how authority could be used to persuade people to do awful things. Stanley Milgram experiments on authority. Stanley Milgram, born in 1933 in New York, grew up during World War II, when Nazi atrocities became well known to the world. He earned a political science degree from Queens College and went on to Harvard for a Ph.D. in social relations. He took a faculty position at Yale, where he conducted a classic experiment that pitted the subject's moral beliefs against the demands of authority. His experiment found that 65% of his subjects, ordinary residents of New Haven, were willing to give apparently harmful electric shocks to a pitifully protesting victim, simply because a scientific authority commanded them to, despite the fact that the victim did nothing to deserve punishment. Milgram's results have been used as partial explanation for the German atrocities of World War II. Of course, that's mere first conclusion bias. That's not the complete and correct explanation. Authority is part of it. However, there were also quite a few other psychological principles, all operating in the same direction, that achieved that Lollapalooza effect precisely because they acted in combination toward the same end. People have gradually figured that out. And if you read the recent psychology texts at a place like Stanford, you'll see that they've now managed to get it about 2/3 right. However, here's the main experiment in all of psychology. And even at Stanford, they still leave out some of the important causes of Milgram's results. How can smart people be so wrong? Well, the answer is that they don't do what I'm telling you to do, which is to take all the main models from psychology and use them as a checklist in reviewing outcomes in complex systems. No pilot takes off without going through his checklist, A, B, C, D. And no bridge player who needs 2 extra tricks plays a hand without going down his checklist and figuring out how to do it. But these psychology professors think they're so smart that they don't need a checklist. But they aren't that smart. Almost nobody is. Or maybe nobody is. If they used a checklist, they'd realize the Milgram experiment harnesses 6 psychological principles, at least not 3. All they'd have to do is to go down the checklist to see the ones that they missed. Similarly, without this system of getting the main models and using them together in a multimodular way, you'll screw up time after time after time, too. One reason psychology professors so screw up denial is that it's hard to do demonstrative experiments without conduct forbidden by ethics. To demonstrate how misery creates mental dysfunction in people, think of what you'd have to do to your fellow human beings. And you'd have to do it without telling Kim about the injury to come. So clearly, there are ethical reasons why it's practically impossible to do the experiments necessary to best lay out the ways human misery creates human mental misfunction. Most professors solve this problem in effect by assuming, if I can't demonstrate it with my experiments, then it doesn't exist. However, obviously, that's asinine. If something is very important but can't be perfectly and precisely demonstrated because of ethical constraints, you can't just meet it like it doesn't exist. You have to do the best you can with it, with such evidence as is available. Pavlov himself spent the last 10 years of his life torturing dogs. And he published. Thus, we have a vast amount of data about misery-caused mental misfunction in dogs and its correction. Yet it's in no introductory psychology book that you'll ever see. I don't know whether they don't like the fact that Pavlov tortured dogs or whether B.F. Skinner, by overclaiming when he lapsed into his literary mode, made the drawing of implications from animal behavior into human behavior unpopular. However, for some crazy reason or other, the psychology books are grossly inadequate in dealing with misery-caused mental misfunction. You may say, what difference does all this psychological ignorance make? Well, if I'm right, you need these models that are blanked out by this ignorance. And furthermore, you need them in a form whereby, if there are 20 constructs, you have all 20 in other words. 250. You have all 20 in other words. You should not be operating with pen, and you need to use them as a checklist, so you have to go back and put in your own head. but I had called the psychology of misjudgment in a form where why you have all the important models and you can use them. Yep. And you specially need them when 4 or 5 forces from these models come together to operate in the same direction. In such cases, you often get Lollapalooza effects, which can make you rich, or they can kill you, so it's essential that you be aware of Lollapalooza effects. Yep. There's only one right way to do it. You have to get the main doctrines together and use them as a checklist. And to repeat for emphasis, you have to pay special attention to combinational effects that create Lollapalooza consequences. Yep. Charlie discussed the lack of multidisciplinary teaching, and the profession, especially how the field of psychology is virtually ignored in academy. Yep. You can also learn when you are playing the game of persuasion for a reputable reason. I hope to combine these forces in a way that makes you more effective. Yep. Let me give you an example of that, of why psychology of you're in Captain Cook's day. He took these long voyages, and the time scurvy was the grade of long voyage. And in scurvy, you are leaving guns petrify in your mouth, in which the disease gets unpleasant and kills you. Yep. And being on a primitive sailing ship with a bunch of dying sailors is very awkward business, so everybody was terribly interested in scurvy. But they did not know about vitamin C well. Captain Cook, being a smart man with a multiple model kind of approach, noticed that Dutch ships had less scurvy than English ships on long voyages. So he said, "What are the Dutch doing that's different?" And he noticed they had all these barrels of sauerkraut. So he thought, "I'm going on these long voyages, and it's very dangerous. Sauerkraut may help." So he laid in all this sauerkraut, which, incidentally, happens to contain a trace of vitamin C. But English sailors were a tough, cranky, and dangerous bunch in that day. They hated krauts, and they were used to their standard food and booze. So how do you get such English sailors to eat sauerkraut? Yep. Well, Cook didn't want to tell them that he was doing it in the hope it would prevent scurvy, because they might mutiny and take over the ship if they thought that he was taking them on a voyage so long that scurvy was likely. So here's what he did. Officers ate at one place where the men could observe them. And for a long time, he served sauerkraut to the officers, but not to the men. And then finally Captain Cook said, "Well, the men can have it 1 day a week." Yep. In due course, he had the whole crew eating sauerkraut. I regard that as a very constructive use of elementary psychology. It may have saved God knows how many lives, and caused God knows how much achievement. However, if you don't know the right techniques, you can't use them. Yep. Charlie discusses psychological effects in play in marketing of consumer items, such as Coca-Cola, Procter & Gamble products, Tupperware, etc. Yep. Worldly wisdom is mostly very, very simple. And what I'm urging on you is not that hard to do if you have the will to plow through and do it. And the rewards are awesome, absolutely awesome. Yep. But maybe you aren't interested in awesome rewards, or avoiding a lot of misery, or being more able to serve everything you love in life. And if that's your attitude, then don't pay attention to what I've been trying to tell you, because you're already on the right track. Yep. It can't be emphasized too much that issues of morality are deeply entwined with worldly wisdom considerations involving psychology. For example, take the issue of stealing. A very significant fraction of the people in the world will steal if A, it's very easy to do, and B, there's practically no chance of being caught. Yep. And once they start stealing, the consistency principle, which is a big part of human psychology, will soon combine with operant conditioning to make stealing habitual. So if you run a business where it's easy to steal because of your methods, you're working a great moral injury on the people who work for you. Yep. It can't be emphasized too much that issues of morality are deeply entwined with worldly wisdom considerations involving psychology. Yep. Serpico, 1973. Serpico was a popular film directed by Sidney Lumet, based on the book by journalist Peter Moss of A True Story. The plot concerns undercover police officer Frank Serpico, who does his best arresting criminals of all types, but especially drug dealers, despite working in a corrupt police department. Serpico refuses to accept bribes and becomes sufficiently appalled at his shady colleagues that he testifies against them, thus placing his life in jeopardy. Set in the early 1970s, the film makes several references to hippie culture and thus appears somewhat dated to current viewers. Al Pacino appeared in the title role and earned an Academy Award nomination for his acting. The film was also nominated for a screenwriting Oscar. Again, that's obvious. It's very, very important to create human systems that are hard to cheat. Otherwise, you're ruining your civilization, because these big incentives will create incentive-caused bias, and people will rationalize that bad behavior is okay. Then if somebody else does it, now you've got at least two psychological principles: incentive-caused bias plus social proof. Not only that, but you get Serpico effects. If enough people are profiting in a general social climate of doing wrong, then they'll turn on you and become dangerous enemies if you try and blow the whistle. It's very dangerous to ignore these principles and let slop creep in. Powerful psychological forces are at work for evil. When the incentives are wrong, what a pain. Employee fraud in medical disability cases is often an outgrowth of hard-to-diagnose complaints such as ever-popular back pain. But disability fraud extends as well to scams perpetrated by medical practitioners, including phantom treatments, double billing, unnecessary care, and unneeded tests. Charlie's point is that the system as designed invites cheating, and that human beings are psychologically predisposed to commit fraud when available incentives overwhelm structural checks and balances. As he puts it, if you want to change behaviors, you have to change motivations. How does this relate to the law business? When people graduate from places like Stanford Law School and go into the legislatures of our nation, and with the best of motives pass laws that are usually used by people to cheat, well, there could hardly be a worse thing you could do. Let's say you have a desire to do public service as a natural part of your planning. You think in rivers and ask, what can I do to ruin our civilization? That's easy if what you want to do is to ruin your civilization. You just go to the legislature and pass laws that create systems wherein people can easily cheat. It will work perfectly. Take the workers' compensation system in California. Stress is real, and its measuring can be real, so you want to compensate people for their strengths in the workplace. It seems like a noble thing to do. But the trouble with such a compensation practice is that it's practically impossible to delete huge cheating. And once you reward cheating, you get group Lions Club doctors, group union sexy actress, participating in referral scheme. You get the total miasma of disastrous behavior. And the behavior makes all the people doing it was as they do it, so you were trying to help your civilization. But what you did was create enormous damage, net. So it's much better to let some things go and compensated to let life be hard than to create systems that are easy to cheat. Let me give you an example. I have a friend who made an industrial product at a plant in Texas. Not far from the border, he was in a low-margin top business. He got massive fraud in the workers' compensation system, to the point that his premium reached double-digit percentages of payroll. And it was not that dangerous to produce his product. It's not like he was a demolition contractor or something. So he pleaded with the union, "You've got to stop this. There's not enough money in making this product to cover all of this fraud." But by then, everyone's used to it. It's extra income. It's extra money. Everybody does it. It can't be that wrong. Eminent lawyers, eminent doctors, eminent chiropractors. if there are any such things, are cheating. And no one could tell them, you can't do it anymore. Incidentally, that's Pavlovian mere association too. When people get bad news, they hate the messenger. Therefore, it was very hard for the union representative to tell all of these people that the easy money was about to stop. That is not the way to advance as a union representative. So my friend closed his plant and moved the work to Utah among a community of believing Mormons. So my friend closed his plant and moved the work to Utah among a community of believing Mormons. Well, the Mormons aren't into workers' compensation fraud. At least they aren't in my friend's plant. And guess what his workers' compensation expense is today? It's 2% of payroll, down from double digits. This sort of tragedy is caused by letting the slop run. You must stop slop early. It's very hard to stop slop and moral failure if you let it run for a while. Charlie describes his notion of deprival superreaction syndrome as it relates to gambling and the new Coke debacle of the mid-1980s. Of course, as I said before, there is one big consideration that needs huge and special attention as part of any use of techniques deliberately harnessing elementary psychological forces, and that is that once you know how to do it, there are real moral limitations regarding how much you should do it. Not all of what you know how to do should you use to manipulate people. Also, if you're willing to transcend the moral limits and the person you're trying to manipulate realizes what you're doing because he also understands the psychology, he'll hate you. There is wonderfully persuasive evidence of this effect taken from labor relations in Israel. So not only are there moral objections, but there are also practical objections, big ones in some cases. 255. What makes investment hard, as I said at USC, is that it's easy to see that some companies have better businesses than others. But the price of the stock goes up so high that, all of a sudden, the question of which stock is the best to buy gets quite difficult. Q. How do you incorporate psychology in your investment decisions? I think it would be more than just pick and products that will appeal to everybody like Coke. There are a lot of smart people out there also think just the way that you showed us today. So are you looking for failure in the thinking other investors you go about picking successful companies? What makes investment hard, as I said at USC, is that it's easy to see that some companies have better businesses than others. But the price of the stock goes up so high that, all of a sudden, the question of which stock is the best to buy gets quite difficult. We've never eliminated the difficulty of that problem. And 98% of the time, our attitude toward the market is that we're agnostics. We don't know. Is GM valued properly vis-a-vis Ford? We don't know. We're always looking for something where we think we have an insight which gives us a big statistical advantage. And sometimes it comes from psychology, but often it comes from something else. And we only find a few, maybe one or two a year. We have no system for having automatic good judgment on all investment decisions that can be made. Ours is a totally different system. We just look for no-brainer decisions. As Buffett and I say over and over again, we don't leap 7-foot fences. Instead, we look for 1-foot fences with big rewards on the other side. So we've succeeded by making the world easy for ourselves, not by solving hard problems. Q. Based on statistical analysis and insight. Well, certainly when we do make a decision, we think that we have an insight advantage. And it's true that some of the insight is statistical in nature. However, again, we find only a few of those. We just look for no-brainer decisions. As Buffett and I say over and over again, we don't leap 7-foot fences. It doesn't help us merely for favorable odds to exist. They have to be in a place where we can recognize them. So it takes a mispriced opportunity that we're smart enough to recognize. And that combination doesn't occur often. But it doesn't have to. If you wait for the big opportunity and have the courage and vigor to grasp it firmly when it arrives, how many do you need? For example, take the top 10 business investments Berkshire Hathaway's ever made. We would be very rich if we'd never done anything else in 2 lifetimes. So once again, we don't have any system for giving you perfect investment judgment on all subjects at all times. That would be ridiculous. I'm just trying to give you a method you can use to sift reality to obtain an occasional opportunity for rational reaction. If you take that method into something as competitive as common stock picking, you're competing with many brilliant people. So even with our method, we only get a few opportunities. Fortunately, that happens to be enough. Q. Have you been successful in creating an atmosphere where people below you can do the same things you're talking about doing yourself? For example, you talked about the tendency towards commitment and consistency, mostly about the terrible mistakes it causes you to make. Q. How have you created an atmosphere comfortable enough for people to abandon that tendency and admit that they have made a mistake? For example, someone here earlier this year from Intel talked about problems that occurred with their Pentium chip. One of the most difficult things for them to do was to realize they have been going about it in the wrong way and turn course. And it's very difficult to do that in a complex structure. How do you foster that? Intel and its ilk create a coherent culture where teams solve difficult problems on the cutting edge of science. That's radically different from Berkshire Hathaway. Berkshire is a holding company. We've decentralized all the power except for natural headquarters-type capital allocation. By and large, we've chosen people we admire enormously to have the power beneath us. It's easy for us to get along with them on average because we love and admire them. And they create the culture for whatever invention and reality recognition is going on in their businesses. And included in that reality recognition is the recognition that previous conclusions were incorrect. But we're a totally different kind of company. It's not at all clear to me that Warren or I would be that good at doing what Andy Grove does. We don't have special competence in that field. We are fairly good at relating to brilliant people we love, but we have defects. For example, some regard me as absent-minded and opinionated. I might be a mess at Intel. However, both Warren and I are very good at changing our prior conclusions. We work at developing that facility because, without it, disaster often comes. Q. Would you talk a little bit about your seeming predilection away from investing in high-technology stocks on your own path and the part of Berkshire Hathaway? One of the things I have found opening and a little surprising is how the difficulties of running low-tech business and those of running a high-tech business are not all that different. They are all hard, but why should it be easy to get rich? In a competitive world, should not it be impossible for there to be an easy way to get rich for everybody? Of course they are all hard. And yes, low-tech business can be plenty hard. Just try to open a restaurant and make it succeed. The reason we're not in high-tech businesses is that we have a special lack of aptitude in that area. And yes, a low-tech business can be plenty hard. Just try to open a restaurant and make it succeed. Q. You seem to be suggesting that there's special aptitude required in low-tech business, that they're harder. But aren't they equally difficult? The advantage of low-tech stuff for us is that we think we understand it fairly well. The other stuff we don't. And we'd rather deal with what we understand. Why should we want to play a competitive game in a field where we have no advantage, maybe a disadvantage instead of, in a field where we have a clear advantage? Each of you will have to figure out where your talents lie, and you'll have to use your advantages. But if you try to succeed in what you're worst at, you're going to have a very lousy career. I can almost guarantee it. To do otherwise, you'd have to buy a winning lottery ticket or get very lucky somewhere else. Warren Buffett has said that the investment Berkshire made in an airline was a good example of what not to do. What chain of thinking led to that wrong decision? We were not buying stock in U.S. Air on the theory that the common shareholders were certain to prosper, because the history of the airline business in terms of taking care of shareholders has been terrible. It was a preferred stock with a mandatory redemption. In effect, we were loaning money to U.S. Air, and we had this equity kicker. We weren't guessing whether it would be a great place for the shareholders. We were guessing whether it would remain prosperous enough to pay off a credit instrument carrying a fixed dividend and a mandatory redemption. And we guessed that the business would not get so bad that we'd have a credit threat for which we were not being adequately compensated by the high rate we were getting. As it happened, U.S. Air went right to the brink of going broke. It was hanging by a thread for several months. It's since come back, and we'll probably get all our money back plus the whole coupon. But it was a mistake. Editor's note: Berkshire did indeed come out whole on its U.S. Air investment. The history of the airline business in terms of taking care of shareholders has been terrible. I don't want you to think we have any way of learning or behaving so you won't make a lot of mistakes. I'm just saying that you can learn to make fewer mistakes than other people, and how to fix your mistakes faster when you do make them. But there's no way that you can live an adequate life without making many mistakes. In fact, one trick in life is to get so you can handle mistakes. Failure to handle psychological denial is a common way for people to go broke. You've made an enormous commitment to something. You've poured effort and money in. And the more you put in, the more that the whole consistency principle makes you think, now it has to work. If I put in just a little more, then it'll work. Part of what you must learn is how to handle mistakes and new facts that change the odds. Life, in part, is like a poker game wherein you have to learn to quit sometimes when holding a much-loved hand. And deprival superreaction syndrome also comes in. You're going to lose the whole thing if you don't put in a little more. People go broke that way because they can't stop, rethink, and say, I can afford to write this one off and live to fight again. I don't have to pursue this thing as an obsession in a way that will break me. Could you talk about the thoughts that went into your decision to swap your capital city stock for Disney rather than taking cash? In the media, it was reported that you mentioned thinking about taking the cash. Disney's a perfectly marvelous company, but it's also very high-priced. Part of what it does is to make ordinary movies, which is not a business that attracts me at all. However, part of what Disney has is better than a great gold mine. My grandchildren, I mean. Those video cassettes. The value of a spouse. At age 26, Walt Disney was already the head of a successful cartoon studio in Hollywood, California. But business was less than rosy for the young cartoonist, because his principal property, Oswald the Rabbit, had just been wrested from his control by his financial backers. Mrs. Disney and I were coming back from New York on the train, and I had to have something I could tell them, he recalled. I have lost Oswald, but I had this mouse in the back of my head. Walt's new creation was a little mouse in red velvet pants named Mortimer. Walt's wife, Lillian, felt that was too pompous a name for such a cute character and suggested Mickey instead. The rest is Disney history. Disney is an amazing example of autocatalysis. They had all those movies in the can. They owned the copyright. And just as Coke could prosper when refrigeration came, when the video cassette was invented, Disney didn't have to invent anything or do anything except take the thing out of the can and stick it on the cassette. Disney is an amazing example of autocatalysis. They had all those movies in the can. They owned the copyright. And just as Coke could prosper when refrigeration came, when the video cassette was invented, Disney didn't have to invent anything or do anything except take the thing out of the can and stick it on the cassette. And every parent and grandparent wanted his descendants to sit around and watch that stuff at home on video cassette. So Disney got this enormous tailwind from life. And it was billions of dollars worth of tailwind. Obviously, that's a marvelous model if you can find it. You don't have to invent anything. All you have to do is to sit there while the world carries you forward. Disney's done a lot of new things right. Don't misunderstand me. But a lot of what happened to Disney was like what a friend of mine said about an ignorant fraternity brother of his who succeeded in life. He was a duck sitting on a pond. And they raised the level of the round. Eisner and Wells were brilliant in how they ran Disney. But the huge tailwind from videocassette sales on all of the old stuff that was there when they came in, that was just an automatic break for the new management. To be fair, they have been brilliant about creating new stuff like the Pocahontas and the Lion King, the same tailwind. But by the time it's done, the Lion King alone is going to do billions. And by the way, when I say when it's done, I mean 50 years from now or something, but plural billions from one movie. Q, could you talk about why you left the law? I had a huge family. Nancy and I supported 8 children. And I didn't realize that the law was going to get as prosperous as it suddenly got. The big money came into law shortly after I left it. By 1962, L was mostly out. And I was totally out by 1965. So that was a long time ago. Also, I preferred making the decisions and gambling my own money. I usually thought I knew better than the client anyway. So why should I have to do it his way? So partly, it was having an opinionated personality, and partly, it was a desire to get resources permitting independence. 262. Also, the bulk of my clients were terrific. But there were 1 or 2 I didn't enjoy. Plus, I liked the independence of a capitalist. And I'd always had sort of a gambling personality. I like figuring things out and making bets. So I simply did what came naturally. Q, do you ever gamble Las Vegas style? I won't bet $100 against house odds between now and the grave. I don't do that. Why should I? I will gamble recreationally with my pals. And I'll occasionally play a much better bridge player, like Bob Hammond, who might be the best card player in the world. But I know I'm paving for the fun of playing with him. That's recreational. As for gambling with simple mechanical house odds against me, why in the world would I ever want to do that, particularly given how I detest the manipulative culture of legalized gambling? So I don't like legalized gambling. And I'm not comfortable in Las Vegas, even though it does not include a higher percentage of wholesome family recreation. I don't like to be with many of the types who hang around card parlors and so forth. On the other hand, I do like the manly art of wagering, so to speak. And I like light social gambling among friends. But I do not like the professional gambling milieu. Q, could you say something about how the mutual fund and money management business has changed since you got into it, and the growth of capital markets? Actually, I didn't really get into it. I had a little private partnership for 14 years up, until a little over 20 years ago. However, I never had enough money from other people to amount to a hill of beans at least by current investment management standards. So I've never really been part of the mutual fund business. But the money management business has been one of the great growth businesses in the recent history of the United States. It's created many affluent professionals and multimillionaires. It's been a perfect gold mine for people who got in it early. The growth of pension funds, the value of American corporations, and the world's wealth have created a fabulous profession for many and carried lots of them up to affluence. And we deal with them in a variety of ways. However, we haven't been part of it for many years. We've basically invested our own money for a long, long time. Still the best. The Intelligent Investor, still the best book on investing. It has the only 3 ideas you really need. L. The Mr. Market analogy. 2. A stock is a piece of a business. 3. Margin of safety. Buffett. Important books by Benjamin Graham. Security Analysis, 1934. The Interpretation of Financial Statements, 1937. World Commodities and World Currency, 1944. The Intelligent Investor, 1949. Benjamin Graham, The Memoirs of the Dean of Wall Street, 1996, posthumous. Q. Do you expect this bull run to continue? Well, I'd be amazed if the capitalized value of all American business weren't considerably higher 25 years from now. And if people continue to trade with one another and shuffle these pieces of paper around, then money management may continue to be a marvelous business for the managers. But except for what might be called our own money, we're really not in it. Q. I was interested in the evolution of your investment strategy from when you first began, using the Ben Graham model, to the Berkshire Hathaway model. Would you recommend that model to a beginning investor? Dumping most of it or all of it into one opportunity, we think is a great one, and leaving it there for decades. That strategy really for a more major investor. Each person has to play the game given his own marginal utility considerations, and in a way that takes into account his own psychology. If losses are going to make you miserable, and some losses are inevitable, you might be wise to utilize a very conservative pattern of investment and saving all your life. So you have to adapt your strategy to your own nature and your own talents. I don't think there's a one-size-fits-all investment strategy that I can give you. Mine works for me. In part, that's because I'm good at taking losses. I can take them psychologically. And besides, I have very few. The combination works fine. Q. You and Buffett have said that Berkshire stock is overvalued, and you don't recommend buying it. We didn't say we thought it was overvalued. We just said that we wouldn't buy it or recommend that our friends buy it at the prices then prevailing. But that just related to Berkshire's intrinsic value as it was at that time. Q. If I had the money, I should buy it, because you've been saying that your returns will go down for 20 years. Well, I hope that your optimism is justified. But I do not change my opinion. After all, today, we're in uncharted territory. I sometimes tell my friends, I'm doing the best I can. But I've never grown old before. I'm doing it for the first sure time. And I'm not that I'll do it right. I sometimes tell my friends, I'm doing the best I can. But I have never grown old before. I'm doing it for the first time. And I am not sure that I'll do it right. Warren and I have never been in this kind of territory, with high valuations and a huge amount of capital. We've never done it before. So we're learning. Q. Everything Warren and Buffett say seems logical. But it sounds like the same language that Ben Graham was saying 30 years ago. He was saying the stock market was overvalued when it was at 900. Yep. The wealth of the world will compound at no such rate. Yep. Oh, I don't think that we share that with him. Graham, great though he was as a man, had a screw loose as he tried to predict outcomes for the stock market as a whole. In contrast, Warren and I are almost always agnostic about the market. Yep. On the other hand, we have said that common stocks generally have generated returns of 10 to 11% after inflation for many years, and that those returns can't continue for a very long period. And they can't. It's simply impossible. The wealth of the world will compound at no such rate. Whatever experience Stanford has had in its portfolio for the last 15 years, its future experience is virtually certain to be worse. It may still be okay, but it's been a hog heaven period for investors over the last 15 years. Bonanza effects of such scale can't last forever. Berkshire Annual Report got a lot of praise for being pessimistic and for expressing concern about the shrinking pool of opportunities. As the company gets bigger and bigger, where does that leave you 10 years from now? We've said over and over that our future rate of compounding our shareholders' wealth is going to go down compared to our past, and that our size will be an anchor dragging on performance. And we've said over and over again that this is not an opinion but a promise. However, let's suppose that we were able to compound our present book value at 15% per annum from this point. That would not be so bad and would work out okay for our long-term shareholder. I'm just saying that we could afford to slow down some, as we surely will, and still do okay for the long-term shareholder. By the way, I'm not promising that we will compound our present book value at 15% per annum. The limits to compounding. The $24 real estate investment by the Dutch to buy the island of Manhattan would today, by some estimates, be roughly equivalent to $3 trillion. Over 378 years, that's about a 7% annual compound rate of return. You talked about how important it was not to have an extreme ideology. What responsibility, if any, you think the business and legal communities have for helping inner-city areas, spreading the wealth and so on? I'm all for fixing social problems. I'm all for being generous to the less fortunate. I'm all for fixing social problems. I'm all for being generous to the less fortunate. And I'm all for doing things where, based on a slight preponderance of the evidence, you guess that it's likely to do more good than harm. What I'm against is being very confident and feeling that you know, for sure, that your particular intervention will do more good than harm, given that you're dealing with highly complex systems wherein everything is interacting with everything else. So what you're saying is to just make sure that what you're doing is doing more good. You can't make sure. That's my point. On the other hand, I did recently reverse the conclusions of 2 sets of engineers. How did I have enough confidence in such a complicated field to do that? Well, you might think, oh, this guy is just an egomaniac who's made some money and thinks he knows everything. 268. Well, I may be an egomaniac, but I don't think I know everything. But I saw huge reasons in the circumstances for bias in each set of engineers, as each recommended a course of action very advantageous to itself. And what each was saying was so consonant with a natural bias that it made me distrust it. Also, perhaps I knew enough engineering to know that what they were saving didn't make sense. Finally, I found a third engineer who recommended a solution I approved. And thereafter the second engineer came to me and said, "Charlie, why didn't I think of that?" Which is to his credit. It was a much better solution, both safer and cheaper. You must have the confidence to override people with more credentials than you. whose cognition is impaired by incentive-caused bias or some similar psychological force that is obviously present. But there are also cases where you have to recognize that you have no wisdom to add, and that your best course is to trust some expert. In effect, you've got to know what you know and what you don't know. What could possibly be more useful in life than that? Q, you discussed Coke's mistake. Do you have any thoughts where Apple went wrong? Let me give you a very good answer one I'm copying from Jack Welch, the CEO of General Electric. He has a Ph.D. in engineering. He's a star businessman. He's a marvelous guy. And recently, in Warren's presence, someone asked him, "Jack, what did Apple do wrong?" His answer: "I don't have any special competence that would enable me to answer that question. And I'll give you the very same answer. That's not a field in which I'm capable of giving you any special insight." On the other hand, in copying Jack Welch, I am trying to teach you something. When you don't know and you don't have any special competence, don't be afraid to say so. There's another type of person I compare to an example from biology. When a bee finds nectar, it comes back and does a little dance that tells the rest of the hive, as a matter of genetic programming, which direction to go and how far. So about 40 or 50 years ago, some clever scientist stuck the nectar straight up. Well, the nectar's never straight up in the ordinary life of a bee. The nectar's out. So the bee finds the nectar and returns to the hive. But it doesn't have the genetic programming to do a dance that says straight up. So what does it do? Well, if it were like Jack Welch, it would just sit there. But what it actually does is to dance this incoherent dance that gums things up. And a lot of people are like that bee. They attempt to answer a question like that. And that is a huge mistake. Nobody expects you to know everything about everything. I try to get rid of people who always confidently answer questions about which they don't have any real knowledge. To me, they're like the bee dancing its incoherent dance. They're just screwing up the hive. Q, as someone who has been in legal practice and business, how did you incorporate these models into your legal practice? And how did it work? I suspect many of us have seen law firms that don't appear to adhere to these kinds of models. Well, the models are there. But just as there are perverse incentives in academia, there are perverse incentives in law firms. In fact, in some respects, at the law firms, it's much worse. Here's another model from law practice. When I was very young, my father practiced law. One of his best friends, Grant McFadden, Omaha's Pioneer Ford dealer, was a client. He was a perfectly marvelous man, a self-made Irishman who'd run away uneducated from a farm as a youth because his father beat him. So he made his own way in the world. And he was a brilliant man of enormous charm and integrity, just a wonderful, wonderful man. In contrast, my father had another client who was a blowhard, overreaching, unfair, pompous, difficult man. And I must have been 14 years old or thereabouts when I asked, "Dad, why do you do so much work for Mr. X, this overreaching blowhard, instead of working more for wonderful men like Grant McFadden?" My father said, "Grant McFadden treats his employees right, his customers right, and his problems right. And if he gets involved with a psychotic, he quickly walks over to where the psychotic is and works out an exit as fast as he can. Therefore, Grant McFadden doesn't have enough remunerative law business to keep you in Coca-Cola. But Mr. X is a walking minefield of wonderful legal business." This case demonstrates one of the troubles with practicing law. To a considerable extent, you're going to be dealing with grossly defective people. They create an enormous amount of the remunerative law business. And even when your own client is a paragon of virtue, you'll often be dealing with gross defectives on the other side or even on the bench. That's partly what drove me out of the profession. The rest was my own greed, but my success in serving greed partly allowed me to make easier the process of being honorable and sensible. Like Ben Franklin observed, it's hard for an empty sack to stand upright. As you go through life, sell your services once in a while to an unreasonable blowhard if that's what you must do to feed your family. But run your own life like Grant McFadden. That was a great lesson. I'd argue that my father's model, when I asked him about the two clients, was totally correct dedication. He taught me the right lesson. The lesson: as you go through life, sell your services once in a while to an unreasonable blowhard if that's what you must do to feed your family. But run your own life like Grant McFadden. That was a great lesson. And he taught it in a very clever way, because instead of just pounding it in, he told it to me in a way that required a slight mental reach. And I had to make the reach myself in order to get the idea that I should behave like Grant McFadden. And because I had to reach for it, he figured I'd hold it better. And indeed, I've held it all the way through until today, through all of these decades. That's a very clever teaching method. There again, we're talking about elementary psychology. It's elementary literature. Good literature makes the reader reach a little for understanding. Then it works better. You hold it better. It's the commitment and consistency tendency. If you've reached for it, the idea's pounded in better. Good literature makes the reader reach a line for understanding. If you've reached for it, the idea's pounded in better. As a lawyer or executive, you'll want to teach somebody what my father taught me, or maybe you'll want to teach them something else. And you can use lessons like this. Isn't that a great way to teach a child? My father used indirection on purpose. And look at how powerfully it worked, like Captain Cook's wise use of psychology. I've been trying to imitate Grant McFadden ever since for all my life. I may have had a few lapses, but at least I've been trying. Q. At the end of your article in our OID, you mentioned that only a select few investment managers actually add value. Since you are speaking to an audience of future lawyer, would you encourage to do in order to be able to add value in our profession? To the extent you become a person who chinks correctly, you can add great value. To the extent you've learned it so well that you have enough confidence to intervene where it takes a little courage, you can add great value. And to the extent that you can prevent or stop some asininity that would otherwise destroy your firm, your client, or something that you care about, you can add great value. And there are constructive tricks you can use. For example, one reason why my old classmate, Joe Flom of Skadden Arps, has been such a successful lawyer is that he's very good at dreaming up little vivid examples that serve to pound the point home in a way that really works. It's enormously helpful when you're serving clients or otherwise trying to persuade someone in a good cause to come up with a little humorous example. The ability to do that is a knack. So you could argue that the Joe Floms of the world are almost born with a gift. But he's honed the gift. And to one degree or another, all of you were born with the gift. And you can hone it too. Occasionally, you get into borderline stuff. For instance, suppose you've got a client who really wants to commit tax fraud. If he doesn't push the tax law way beyond the line, he can't stand it. He can't shave in the morning if he thinks there's been any cheating he could get by with that he hasn't done. And there are people like that. They just feel they aren't living aggressively enough. You can approach that situation in either of two ways. A, you can say, L just won't work for him and duck it. Or B, you can say, Well, the circumstances of my life require that I work for him. And what I'm doing for him doesn't involve my cheating. Therefore, I'll do it. Yep. And if you see he wants to do something really stupid, it probably won't work to tell him, what you're doing is bad. I have better morals than you. Yep. That offends him. You're young. He's old. Therefore, instead of being persuaded, he's more likely to react with, who in the hell are you to establish the moral code of the whole world? Yep. But instead, you can say to him, you can't do that without 3 other people beneath you knowing about it. Therefore, you're making yourself subject to blackmail. You're risking your reputation. You're risking your family, your money, etc. That is likely to work. And you're telling him something that's true. Do you want to spend a lot of time working for people where you have to use methods like that to get them to behave well? I think the answer is no. But if you're hooked with it, appealing to his interest is likely to work better as a matter of human persuasion than appealing to anything else. That, again, is a powerful psychological principle with deep biological roots. I saw that psychological principle totally blown at Salomon. Salomon's general counsel knew that the CEO, Gutfreund, should have promptly told the federal authorities all about Salomon's trading improprieties in which Gutfreund didn't participate and which he hadn't caused. And the general counsel urged Gutfreund to do it. He told Gutfreund, in effect, you're probably not legally required to do that, but it's the right thing to do. You really should. Yep. But it didn't work. The task was easy to put off because it was unpleasant. So that's what Gutfreund did, he put it off. Yep. And the general counsel had very little constituency within Salomon except for the CEO. If the CEO went down, the general counsel was going down with him. Therefore, his whole career was on the line. So to save his career, he needed to talk the dilatory CEO into doing the right thing. Yep. It would have been child's play to get that job done right. All the general counsel had to do was to tell his boss, John, this situation could ruin your life. You could lose your wealth. You could lose your reputation. And it would have worked. CEOs don't like the idea of being ruined, disgraced, and fired. Yep. CEOs don't like the idea of being ruined, disgraced, and fired. Yep. And the ex-general counsel of Salomon is brilliant and generous, and he had the right idea. However, he lost his job because he didn't apply a little elementary psychology. He failed to recognize that what works best in most cases is to appeal to a man's interest. Yep. But you don't have to get similarly lousy results when you face similar situations. Just remember what happened to Gutfreund and his general counsel. The right lessons are easily learned if you work at it. And if you do learn them, you can be especially useful at crucial moments when others fail. And to the extent that you do become wise, diligent, objective, and especially able to persuade in a good cause, then you're adding value. Yep. Q. Would you discuss how the threat of litigation, shareholder lawsuits, and so forth, and legal complexity in general have affected decision-making in big business? Yep. Well, every big business screams about its legal costs, screams about the amount of regulation, screams about the complexity of its life, screams about the plaintiff's bar, particularly the class action plaintiff's bar. So there's an absolute catechism on that where you could just copy the screams from one corporation to another, and you'd hardly have to change a word. Yep. But what causes the screams has, so far, been a godsend for the law firms. The big law firms have had a long updraft, and they now tend to kind of cluck like an undertaker in a plague. An undertaker, of course, would look very unseemly if he were jumping up and down and playing his fiddle during the plague. So law firm partners say, oh, isn't it sad, all this complexity, all this litigation, all this unfairness? Yep. An undertaker, of course, would look very unseemly if he were jumping up and down and playing his fiddle during the plague. But really, they're somewhat schizophrenic on the subject because it's been very good for them. Some recent California initiatives created some interesting conduct. Part of the defense bar lobbied quietly against certain propositions and effectively against their clients because they didn't want their clients to catch them in the process. And the reason that they did so was because it became harder for plaintiffs to bring cases. If you make a living fighting overreaching and it keeps your children in school, and somebody proposes a system that eliminates it, well, that's an adult experience and an adult choice that you have to make. So big corporations adapt. They have more litigation. They have to have a bigger legal department. They scream about what they don't like. But they adapt. But hasn't that legal complexity consumed a lot more of companies' resources over the last few decades? The answer, yes. There's hardly a corporation in America that isn't spending more on lawsuits and on compliance with various regulations than it was 20 years ago. And yes, some of the new regulation is stupid and foolish. And some was damn well necessary. And it will ever be thus, albeit with some ebb and flow. But have you seen or experienced any change in decision-making at corporations in there, being less likely to take on riskier investments for fear of failure or liability? The only place I saw with another friend, not Warren Buffett, was where I was part owner of the biggest shareholder in a company that invented a better policeman's heel rest. It was made of Kevlar or something of that sort. And they brought it to us and wanted us to manufacture it. As a matter of ideology, we're very pro-police. I believe civilization needs a police force, although I don't believe in policemen creating too many widows and orphans unnecessarily either. But we like the idea of a better policeman's helmet. However, we took one look at it and said to the people who invented it, "We're a rich corporation. We can't afford to make a better policeman's helmet. That's just how the civilization works. All risks considered, it can't work for us. But we want the civilization to have these. So we don't maximize what we sell it for it. Get somebody else to make it. Transfer the technology or whatever to somebody who can do it. But we're not going to." Thus, we didn't try to disadvantage policemen by keeping them from getting new helmets, but we decided not to manufacture helmets ourselves. There are businesses, given the way the civilization has developed, where being the only deep pocket around is bad business. In high school football, for example, a paraplegic or quadriplegic will inevitably be created occasionally. And who with deep pockets can the injured person best sue other than the helmet manufacturer? Then everyone feels sorry, the injuries are horrible, and the case is dangerous for the manufacturer. I think big, rich corporations are seldom wise to make football helmets in the kind of a civilization we're in. And maybe it should be harder to successfully sue helmet makers. I think big, rich corporations are seldom wise to make football helmets in the kind of a civilization we're in. I know 2 different doctors, each of whom had a sound marriage. And when the malpractice premiums got high enough, they divorced their wives and transferred most of their property to their wives. And they continued to practice, only without malpractice insurance. They're angry at the civilization. They needed to adapt. And they trusted their wives. So that was that. And they've not carried any malpractice insurance since. People adapt to a changing litigation climate. They have various ways of doing it. That's how it's always been, and how it's always going to be. I like the Navy system. If you're a captain in the Navy and you've been up for 24 hours straight and have to go to sleep, and you turn the ship over to competent first mate in tough conditions, and he takes the ship aground, clearly through no fault of yours. They don't court-martial you, but your naval career is over. What I personally hate most are systems that make fraud easy. Probably way more than half of all the chiropractic income in California comes from pure fraud. For example, I have a friend who had a little fender bender and auto accident in a tough neighborhood. And he got 2 chiropractors' cards and 1 lawyer's card before he'd even left the intersection. They're in the business of manufacturing claims that necks hurt. In California, I believe the RAND statistics showed that we have twice as many personal injuries per accident as in many other states. And we are not getting twice as much real injury per accident. The other half of that is fraud. People just get so that they think everybody does it, it is all right to do so. I think it is terrible to let that stuff creep in. If I were running the civilization, compensation for stress in workers' compensation would be 0, not because there is no work causes stress, but because I think the net social damage of allowing stress to be compensated at all is worse than what would happen if a few people that had real work-caused stress injuries went uncompensated. I like the Navy system. If you're a captain in the Navy and you've been up for 24 hours straight and have to go to sleep, and you turn the ship over to a competent first mate in tough conditions, and he takes the ship aground, clearly through no fault of yours, they don't court-martial you, but your naval career is over. You can say that's too tough. That's not law school. That's not due process. Well, the Navy model is better in its context than would be the law school model. The Navy model really forces people to pay attention when conditions are tough because they know that there's no excuse. Napoleon said he liked luckier general, he wasn't into supporting losers. Well, the Navy likes luckier captains. It doesn't matter why your ship goes aground, your career is over. Nobody's interested in your fault. It's just a rule that we happen to have for the good of all effects considered. I like some rules like that. I think that the civilization works better with some of these no-fault rules. But that stuff tends to be anathema around law schools. It's not due process. You're not really searching for justice. Well, I am searching for justice when I argue for the Navy rule, for the justice of fewer ships going aground. Considering the net benefit, I don't care if one captain has some unfairness in his life. After all, it's not like he's being court-martialed. He just has to look for a new line of work. And he keeps vested pension rights and so on. So it's not like it's the end of the world. So I like things like that. However, I'm in a minority. Q, I'd like to hear you talk a little bit more about judgment. In your talk, you said we should read the psychology textbooks and the title 15 or 16 principles that are best of the ones that make sense. The ones that are obviously important and obviously right. That's correct. And then you stick in the ones that are obviously important and not in the books, and you've got a system. Q, right. My problem seems to be the prior step, which is determining which are obviously right, and that seems to me to be more essential question to ask. Well, if you're like me, it's kind of fun for it to be a little complicated. If you want it totally easy and totally laid out, maybe you should join some cult that claims to provide all the answers. No. You overestimate the difficulty. Do you have difficulty understanding that people are heavily influenced by what other people think and what other people do, and that some of that happens on a subconscious level? Q, no, I don't. I understand that. Well, you can go right through the principles. And one after another, they're like that. It's not that hard. Do you have any difficulty with the idea that operant conditioning works, that people will repeat what worked for them the last time? It just seems to me like there's a lot of other things out there as well that also make a lot of sense. The system would quickly get too complicated, I imagine, as a result of too much crosstalk. Yep. Well, if you're like me, it's kind of fun for it to be a little complicated. If you want it totally easy and totally laid out, maybe you should join some cult that claims to provide all the answers. I don't think that's a good way to go. I think you'll just have to endure the world as complicated as it is. Einstein has a marvelous statement on that. Everything should be made as simple as possible, but no more simple. Yep. I'm afraid that's the way it is. If there are 20 factors and they interact some, you'll just have to learn to handle it, because that's the way the world is. But you won't find it that hard if you go at it Darwin-like, step by step with curious persistence. You'll be amazed at how good you can get. You've given us about 3 of the models that you use. I wondered where you found the other ones. And second, do you have an easier way for us to find them than going through a psychology textbook? I'm not averse to doing that, but it takes longer. There are a relatively small number of disciplines and a relatively small number of truly big ideas. And it's a lot of fun to figure it out. Plus, if you figure it out and do the outlining yourself, the ideas will stick better than if you memorize them using somebody else's cram list. Even better, the fun never stops. I was miseducated horribly, and I hadn't bothered to pick up what's called modern Darwinism. I do a lot of miscellaneous reading, too. But I just missed it. And in the last year, I suddenly realized I was a total damned fool and hadn't picked it up properly. So I went back, and with the aid of Dawkins Oxford's great biologist and others, I picked it up. Well, it was an absolute circus for me in my 70s to get the modern Darwinian synthesis in my head. It's so awesomely beautiful and so awesomely right. And it's so simple once you get it. So one beauty of my approach is that the fun never stops. I suppose that it does stop eventually when you're drooling in the convalescent home at the end. But at least it lasts a long time. If I were czar of a law school, although of course no law school will permit a czar, they don't even want the dean to have much power, I'd create a course that I'd call Remedial Worldly Wisdom that would, among other useful things, include a fair amount of properly taught psychology. And it might last 3 weeks or a month. I think you could create a course that was so interesting with pithy examples and powerful principles that it would be a total circus. And I think that it would make the whole law school experience work better. People raise their eyebrows at that idea. People don't do that kind of thing. They may not like the derision that's implicit in the title, Remedial Worldly Wisdom. But the title would be my way of announcing, everybody ought to know this. And if you call it remedial, isn't that what you're saying? This is really basic, and everybody has to know it. Such a course would be a perfect circus. The examples are so legion. I don't see why people don't do it. They may not do it mostly because they don't want to. Also, maybe they don't know how, and maybe they don't know what it is. But the whole law school experience would be much more fun if the really basic ideas were integrated and pounded in with good examples for a month or so before you got into conventional law school material. I think the whole system of education would work better. But nobody has any interest in doing it. 283. And when law schools do reach out beyond traditional material, they often do it, and what looks to me like a pretty damn way you think psychology is badly taught in America, you should look at corporate finance portfolio theory. It's demented. It's truly amazing. I don't know how these things happen at science and engineering tend to be pretty reliable done, But the minute you go outside of the various certain amount of insanity schemes to creep into academia, even in academia involving people with very high IQ, many of the legal doctrines are tied to other doctrines. They're joined at the hip. And yet they teach you those legal doctrines without pointing out how they're tied to the other important doctrines. That's insanity, absolute insanity. On the other hand, a month at the start of law school that really pounded in the basic doctrines. Many of the legal doctrines are tied to other doctrines. They're joined at the hip. And yet, they teach you those legal doctrines without pointing out how they're tied to the other important doctrines. That's insanity, absolute insanity. Why do we have a rule that judges shouldn't talk about legal issues that aren't before them? In my day, they taught us the rule, but not in a way giving reasons tied to the guts of undergraduate courses. It's crazy that people don't have those reasons. The human mind is not constructed so that it works well without having reasons. You've got to hang reality on a theoretical structure with reasons. That's the way it hangs together in usable form so that you're an effective thinker. And to teach doctrines, either with no reasons or with poorly explained reasons, that's wrong. Another reason why I like the idea of having a course on remedial worldly wisdom is that it would force more sense on the professors. It would be awkward for them to teach something that was contravened by lessons that were obviously correct and emphasized in a course named Remedial Worldly Wisdom. Professors doing so would really have to justify themselves. Is that a totally crazy idea? It may be crazy to expect it to be done. However, if somebody had done it, would you have found it useful? I'm always asked this question, spoon-feed me what you know. And of course, what they are often saying is, teach me now to get rich with soft white hands faster. And not only let me get rich faster, but teach me faster too. I think it would be a wonderful thing to have. Unfortunately, when it's created, we won't be here anymore. You're proposing that this would be good to teach people in a course form, so it would be accessible to them. Is there any way that it could be more accessible to us other than having to? I get requests for pointers to easy learning all the time. And I'm trying to provide a little easy learning today. But one talk like this is not the right way to do it. The right way to do it would be in a book. I hope what I'm saving will help you be more effective and better human beings. And if you don't get rich, that won't bother me. But I'm always asked this question, spoon-feed me what you know. And of course, what they're often saying is, teach me how to get rich with soft white hands faster. And not only let me get rich faster, but teach me faster too. I don't have much interest in writing a book myself. Plus, it would be a lot of work for somebody like me to try and do it in my 70s. And I have plenty else to do in life. So I'm not going to do it. But it's a screaming opportunity for somebody. And I'd provide funds to support the writing of an appropriate book if I found someone with the wisdom and the will to do the job right. Let me turn to some of the probable reasons for present bad education. Part of the trouble is caused by the balkanization of academia. For instance, psychology is most powerful when combined with doctrines from other academic departments. But if your psychology professor doesn't know the other doctrines, then he isn't capable of doing the necessary integration. And how would anyone get to be a psychology professor in the first place if he were good with non-psychology doctrines and constantly worked non-psychology doctrines into his material? Such a would-be professor would usually offend his peers and superiors. There have been some fabulous psychology professors in the history of the world. Cialdini, Arizona State was very useful to me, as was B. E. Skinner for his experimental results, if divorced from his monomania and utopianism. But averaged out, I don't believe that psychology professors in America are people whose alternative career paths were in the toughest part of physics. And that may be one of the reasons why they don't get it quite right. Yet, the schools of education, even at eminent universities, are pervaded by psychology, and they're almost an intellectual disgrace. It's not unheard of for academic departments, even at great institutions, to be quite deficient in important ways. And including a lot of material labeled as psychological is no cure-all. And given academic inertia, all academic deficiencies are very hard to fix. Do you know how they tried to fix psychology at the University of Chicago? Having tenured professors who were terrible, the president there actually abolished the entire psychology department. And Chicago, in due course, will probably bring back a new and different psychology department. Indeed, by now it probably has. Perhaps conditions are now better. And I must admit that I admire a college president who will do something like that. I do not wish to imply in my criticism that the imperfections of academic psychology teaching are all attributable to some kind of human fault common only to such departments. Instead, the causes of many of the imperfections lie deep in the nature of things, in irritating peculiarities that can't be removed from psychology. Let me demonstrate by a thought experiment involving a couple of questions. Are there not many fields that need a synthesizing supermind like that of James Clerk Maxwell, but are destined never to attract one? And is academic psychology, by its nature, one of the most unfortunate of all the would-be attractors of superminds? I think the answers are yes and yes. One can see this by considering the case of any of the few members of each generation who can, as fast as fingers can move, accurately work through the problem sets in thermodynamics, electromagnetism, and physical chemistry. Such a person you'll be begged by some of the most eminent people alive to enter the upper reaches of hard science. Will such a super-gifted person instead choose academic psychology, wherein lie verb awkward realities? A. That the tendencies demonstrated by social psychology paradoxically grow weaker as more people learn them, and B. That clinical, patient-treating psychology has to deal with the awkward reality that happiness, physiologically measured, is often improved by believing things that are not true. The answer, I think, is plainly no. The supermind will be repelled by academic psychology, much as Nobel laureate physicist Max Planck was repelled by economics, wherein he saw problems that wouldn't yield to his methods. We talk a lot about takeoffs between the quality of our life and our professional commitments. Is there time for a professional life, learning about these models and doing whatever else interests you? Do you find time to do fun things besides learning? I've always taken a fair amount of time to do what I really wanted to do, some of which was merely to fish or play bridge or play golf. Each of us must figure out his or her own lifestyle. You may want to work 70 hours a week for 10 years to make partner at Cravath, and thereby obtain the obligation to do more of the same. Or you may say, I'm not willing to pay that price. Either way, it's a totally personal decision that you have to make by your own lights. But whatever you decide, I think it's a huge mistake not to absorb elementary worldly wisdom if you're capable of doing it, because it makes you better able to serve others. It makes you better able to serve yourself, and it makes life more fun. So if you have an aptitude for doing it, I think you'd be crazy not to. Your life will be enriched, not only financially but in a host of other ways, if you do. Now this has been a very peculiar talk for some businessman to come in and give at a law school, some guy who's never taken a course in psychology telling you that all of the psychology textbooks are wrong. This is very eccentric. But all I can tell you is that I'm sincere. There's a lot of simple stuff that many of you are quite capable of learning. And your lives will work way better too if you do. Plus, learning it is a lot of fun. So I urge you to learn it. Q. Are you, in effect, fulfilling your responsibility to share the wisdom that you've acquired over the years? Sure. Look at Berkshire Hathaway. I call it the ultimate didactic enterprise. Warren's never going to spend any money. He's going to give it all back to society. He's just building a platform so people will listen to his notions. Needless to say, they're very good notions. And the platform's not so bad either. But you could argue that Warren and I are academics in our own way. Q. Most of what you've said is very compelling. And your quest for knowledge and, therefore, command of the human condition and money are all laudable goals. I'm not sure the quest for money is so laudable. Q. Well, then understandable. That I'll take. I don't sneer, incidentally, bond indentures. If you need the money, it's a bunch of cases in the course of your career ought to do something to earn money. Many you earn money at making sales calls or proofreading fun earning it. And if you have to try, you'll learn something doing that. You activities are dignified by the fact that. Q. I understand your skepticism about overly ideological people. But is there an ideological component to what you do? Is there something that you're irrationally passionate about? Yeah, I'm passionate about wisdom. I'm passionate about accuracy and some kinds of curiosity. Perhaps I have some streak of generosity in my nature and a desire to serve values that transcend my brief life. But maybe I'm just here to show off. Who knows? I believe in the discipline of mastering the best that other people have ever figured out. I don't believe in just sitting down and trying to dream it all up yourself. Nobody's that smart. The best that is known and taught in the world, nothing less, can satisfy a teacher worthy of the name. Sir William Osler. Talk 3 Revisited. When I gave Talk 3 in 1996, I argued that intense political animosity should be avoided because it causes much mental malfunction, even in brilliant brains. Since then, political animosity has increased greatly, both on the left and right, with sad effects on the ability of people to recognize reality, exactly as I would have expected. Naturally, I don't like this result. The grain of my emotional nature is to respond as Archimedes might respond if he complained now to God. How could you put in those dark ages after I published my formulas? Or as Mark Twain once complained, these are sad days in literature. Homer is dead. Shakespeare is dead. And I myself am not feeling at all well. Fortunately, I am still able to refrain from complaint in the mode of Mark Twain. After all, I never had more than a shred of an illusion that any views of mine would much change the world. Instead, I always knew that aiming low was the best path for me, and so I merely sought, 1, to learn from my betters a few practical mental tricks that would help me avoid some of the worst miscognitions common in my age cohort, and 2, to pass on my mental tricks only to few people who could easily learn from me because they already almost knew what I was telling them. Having pretty well accomplished these very limited objectives, I see little reason to complain now about the unwisdom of the world. Instead, what works best for me in coping with all disappointment is what I call the Jewish method, humor. As I revisit Talk 3 in March of 2006, I still like its emphasis on the desirability of making human systems as cheating-proof as is practicable, even if this leaves some human misery unfixed. After all, the people who create rewarded cheating on a massive scale leave a trail of super ruin in their wake, since the bad conduct spreads by example and is so very hard to reverse. And I fondly recall Talk Three's emphasis on both the life-handling lessons I learned from my father's friend, Grant McFadden, and one teaching method I learned from my father. I owe a lot to these long-dead predecessors, and if you like Poor Charlie's Almanac, so do you. Yep. In this talk, Charlie explains how he makes decisions and solves problems by taking a step-by-step through a diverse set of mental models. He presents a case study that asks rhetorically how the listener would go about producing a $2 trillion business from scratch, using as his example Coca-Cola. Naturally, he has his own solution, apt to strike you as both brilliant and perceptive. Charlie's case study leads him to a discussion of academia's failures and its record of having produced generations of sloppy decision-makers. For this problem, he has other solutions. This talk was delivered in 1996 to a group that has a policy of not publicizing its programs. Editor's warning as suggested by Charlie. Most people don't understand this talk. Charlie says it was an extreme communication failure when made, and people have since found it difficult to understand even when read slowly, twice. To Charlie, these outcomes have profound educational implications. Talk 4. Practical thought about practical thought. An informal talk, July 201,996. The title of my talk is Practical Thought About Practical Thought, with a question mark at the end. In a long career, I have assimilated various ultra-simple general notions that I find helpful in solving problems. 5 of these helpful notions I will now describe. After that, I will present to you a problem of extreme scale. Indeed, the problem will involve turning startup capital of $2 million into $2 trillion, a sum large enough to represent a practical achievement. Then I will try to solve the problem, assisted by why helpful general notions. Following that, I will suggest that there are important educational implications in my demonstration. I will so finish because my objective is educational, my game today being a search for better methods of thought. The first helpful notion is that it is usually best to simplify problems by deciding big, no-brainer questions first. The second helpful notion mimics Galileo's conclusion that scientific reality is often revealed only by math, as if math was the language of God. Galileo's attitude also works well in messy, practical life. Without numerical fluency, in the part of life most of us inhabit, you are like a one-legged man in an ass-kicking contest. The third helpful notion is that it is not enough to think problems through forward. You must also think in reverse, much like the rustic who wanted to know where he was going to die so that he'd never go there. Indeed, many problems can't be solved forward. And that is why the great algebraist Carl Jacobi so often said, invert, always invert. And why the Pythagoreans thought in reverse to prove that the square root of 2 was an irrational number. 294. It is not usually the conscious malfeasance of your narrow professional advisor that does you in. Instead, your troubles come from his subconscious bias. The fourth helpful notion is that the best and most practical wisdom is elementary academic wisdom. But there is one extremely important qualification. You must think in a multidisciplinary manner. You must routinely use all the easy to learn concepts from the freshman course in every basic subject. Where elementary ideas will serve, your problem solving must not be limited, as academia and many business bureaucracies are limited, by extreme balkanization into disciplines and subdisciplines, with strong taboos against any venture outside assigned territory. Instead, you must do your multidisciplinary thinking in accord with Ben Franklin's prescription in Poor Richard. If you want it done, go. If not, send. If in your thinking you rely entirely on others, often through purchase of professional advice. Whenever outside a small territory of your own, you will suffer much calamity. And it is not just difficulties in complex coordination that will do you in. You will also suffer from the reality evoked by the Shavian character who said, "In the last analysis, every profession is a conspiracy against the laity." Indeed, a Shavian character, for once, understated the horrors of something Shaw didn't like. It is not usually the conscious malfeasance of your narrow professional advisor that does you in. Instead, your troubles come from his subconscious bias. His cognition will often be impaired, for your purposes, by financial incentives different from yours. And he will also suffer from the psychological defect caught by the proverb, "To a man with a hammer, every problem looks like a nail." The fifth helpful notion is that really big effects, Lollapalooza effects, will often come only from large combinations of factors. For instance, tuberculosis was tamed, at least for a long time, only by routine, combined use in each case of 3 different drugs. And other Lollapalooza effects, like the flight of an airplane, follow a similar pattern. It is now time to present my practical problem. And here is the problem. It is 1884 in Atlanta. You are brought, along with 20 others like you, before a rich and eccentric Atlanta citizen named Glotz. Both you and Glotz share 2 characteristics. First, you routinely use in problem-solving the 5 helpful notions, and second, you know all the elementary ideas in all the basic college courses, as taught in 1996. However, all discoverers and all examples demonstrating these elementary ideas come from dates before 1884. Neither you nor Glotz knows anything about anything that has happened after 1884. Glotz offers to invest $2,1884, yet take only half the equity, for a Glotz charitable foundation, in a new corporation organized to go into the non-alcoholic beverage business and remain in that business only, forever. Glotz wants to use a name that has somehow charmed him, Coca-Cola. The other half of the new corporation's equity will go to the man who most plausibly demonstrates that his business plan will cause Glotz's foundation to be worth $1 trillion 150 years later, in the money of that later time, 2034, despite paying our a large part of its earnings each year as a dividend. This will make the whole new corporation worth $2 trillion, even after paying out many billions of dollars in dividends. You have 15 minutes to make your pitch. What do you say to Glotz? Here is my solution, my pitch to Glotz, using only the helpful notions and what every bright college sophomore should know. Well, Glotz, the big no-brainer decisions that, to simplify our problem, should be made first are as follows. First, we are never going to create something worth $2 trillion by selling some generic beverage. Therefore, we must make your name, Coca-Cola, into a strong legally protected trademark. Second, we can get to $2 trillion only by starting in Atlanta, then succeeding in the rest of the United States, then rapidly succeeding with our new beverage all over the world. This will require developing a product having universal appeal, because it harnesses powerful elemental forces. And the right place to find such powerful elemental forces is in the subject matter of elementary academic courses. We will next use numerical fluency to ascertain what our target implies. We can guess reasonably that by 2034, there will be about 8 billion beverage consumers in the world. On average, each of these consumers will be much more prosperous in real terms than the average consumer of 1884. Each consumer is composed mostly of water and must ingest about 64 ounces of water per day. This is 8 8-ounce servings. Thus, if our new beverage and other imitative beverages in our new market can flavor and otherwise improve only 25% of ingested water worldwide, and we can occupy half of the new world market. We can sell 2.92 trillion 8-ounce servings in 2034. And if we can then net 4 cents per serving, we will earn $117 billion. This will be enough, if our business is still growing at a good rate, to make it easily worth $2 trillion. In essence, we are going into the business of creating and maintaining conditioned reflexes. A big question, of course, is whether 4 cents per serving is a reasonable profit target for 2034. And the answer is yes, if we can create a beverage with strong universal appeal. 150 years is a long time. The dollar, like the Roman drachma, will almost surely suffer monetary depreciation. Concurrently, real purchasing power of the average beverage consumer in the world will go way up. His proclivity to inexpensively improve his experience while ingesting water will go up considerably faster. Meanwhile, as technology improves, the cost of our simple product in units of constant purchasing power will go down. All four factors will work together in favor of our 4 cents per serving profit target. Worldwide beverage purchasing power in dollars will probably multiply by a factor of at least 40 over 150 years. Thinking in reverse, this makes our profit per serving target under L88R conditions a mere 1/40th of 4 cents or 1/10 of a cent per serving. This is an easy-to-exceed target as we start out if our new product has universal appeal. Ivan Pavlov, 1849 or 936. Ivan Pavlov was born in central Russia and attended seminary until age 21, when he abandoned theology in favor of chemistry and physiology. Earning his MD in 1883, he excelled in physiology and surgical techniques. Later, he studied the secretory activity of digestion and ultimately formulated the laws of conditioned reflexes. Pavlov's most famous experiment showed that dogs tend to salivate before food is actually delivered to their mouths. This result led him to a long series of experiments in which he manipulated the stimuli occurring before the presentation of food. He thereby established the basic laws for the establishment and section of what he called conditional reflexes, later mistranslated from the original Russian as conditioned reflexes. He was awarded the Nobel Prize in L9/4 for his work on digestive secretions. 298. That decided. We must next solve the problem of invention to create universal appeal. There are two intertwined challenges of large scale. First, over 150 years, we must cause a new beverage market to assimilate about 1/4 of world's water injection. Second, we must so operate that half the new market is ours, while all our competitors combined are left to share the remaining. These results are Lollapalooza results accordingly. We must attack our problem by causing every favorable factor we can think of to work for us. Plainly, only a powerful combination of many factors is likely to cause the Lollapalooza consequences we desire. Fortunately, the solution to the winter wind problems turns out to be very easy if one has stayed awake in all the freshman courses. I want a can of Coke within arm's reach of every American serviceman, something to remind him of home. Dwight D. Eisenhower, Supreme Allied Commander, World War II. Let us start by exploring the consequences of our simplifying no-brainer decision that we must rely on a strong trademark. This conclusion automatically leads to an understanding of the essence of our business in proper elementary academic terms. We can see from the introductory course in psychology that, in essence, we are going into the business of creating and maintaining conditioned reflexes. The Coca-Cola trade name and trade dress will act as the stimuli, and the purchase and ingestion of our beverage will be the desired responses. The Coca-Cola trade name and trade dress will act as the stimuli, and the purchase and ingestion of our beverage will be the desired responses. And how does one create and maintain conditioned reflexes? Well, the psychology text gives two answers. One, by operant conditioning, and two, by classical conditioning, often called Pavlovian conditioning to honor the great Russian scientist. And since we want a Lollapalooza result, we must use both conditioning techniques, and all we can invent to enhance effects from each technique. The operant conditioning part of our problem is easy to solve. We need only 1. Maximize rewards of our beverage's ingestion, and 2. Minimize possibilities that desired reflexes, once created by us, will be extinguished through operant conditioning by proprietors of competing products. For operant conditioning rewards, there are only a few categories we will find practical. Food value in calories or other inputs. 2. Flavor, texture and aroma acting as stimuli to consumption under neural reprogramming of man through Darwinian natural selection. 3. Stimulus, as by sugar or caffeine. 4. Cooling effect when man is too hot, or warming effect when man is too cool. Wanting a Lollapalooza result, we will naturally include rewards in all the categories. To start out, it is easy to decide to design our beverage for consumption cold. There is much less opportunity, without ingesting beverage, to counteract excessive heat compared with excessive cold. Moreover, with excessive heat, much liquid must be consumed, and the reverse is not true. It is also easy to decide to include both sugar and caffeine. After all, tea, coffee, and lemonade are already widely consumed. And it is also clear that we must be fanatic about determining, through trial and error, flavor and other characteristics that will maximize human pleasure while taking in the sugared water and caffeine we will provide. And to counteract possibilities that desired operant conditioned reflexes, once created by us, will be extinguished by operant conditioning employing competing products, there is also an obvious answer. We will make it a permanent obsession in our company that our beverage, as fast as practicable, will at all times be available everywhere throughout the world. After all, a competing product, if it is never tried, can't act as a reward, creating a conflicting habit. Every spouse knows that. A competing product, if it is never tried, can't act as a reward, creating a conflicting habit. Every spouse knows that. We must next consider the Pavlovian conditioning we must also use. In Pavlovian conditioning, powerful effects come from mere association. The neural system of Pavlov's dog causes it to salivate at the bell it can't eat. And the brain of man yearns for the type of beverage held by the pretty woman he can't have. And so, glots, we must use every sort of decent, honorable Pavlovian conditioning we can think of. For as long as we are in business, our beverage and its promotion must be associated in consumer minds with all other things consumers like or admire. And the brain of man yearns for the type of beverage held by the pretty woman he can't have. Such extensive Pavlovian conditioning will cost a lot of money, particularly for advertising. We will spend big money as far ahead as we can imagine. But the money will be effectively spent. As we expand fast in our new beverage market, our competitors will face gross disadvantages of scale in buying advertising to create the Pavlovian conditioning they need. And this outcome, along with other volume Creates-Bauer effects, should help us gain and hold at least 50% of the new market everywhere. Indeed, provided buyers are scattered, our higher volumes will give us very extreme cost advantages in distribution. Moreover, Pavlovian effects from mere association will help us choose the flavor, texture, and color of our new beverage. Considering Pavlovian effects, we will have wisely chosen the exotic and expensive-sounding name, Coca-Cola, instead of a pedestrian name like Glotz's sugared, caffeinated water. For similar Pavlovian reasons, it will be wise to have our beverage look pretty much like wine instead of sugared water. And so, we will artificially color our beverage if it comes out clear. And we will carbonate our water, making our product seem like champagne or some other expensive beverage, while also making its flavor better and imitation harder to arrange for competing products. And because we are going to attach so many expensive psychological effects to our flavor, that flavor should be different from any other standard flavor, so that we maximize difficulties for competitors and give no accidental same flavor benefit of any existing product. What else from the psychology textbook can help our new business? Well, there is chat powerful, monkey see, monkey do aspect of human nature that psychologists often call social proof. Social proof, imitative consumption triggered by mere sight of consumption, will not only help induce trial of our beverage, it will also bolster perceived rewards from consumption. We will always take this powerful social proof factor into account as we design advertising and sales promotion, and as we forgo present profit to enhance present and future consumption. More than with most other products, increased selling power will come from each increase in sales. We can now see, Glotz, that by combining 1. Much Pavlovian conditioning, 2. Powerful social proof effects, and 3. A wonderful tasting, energy-giving, stimulating, and desirably cold beverage that causes much operant conditioning, we are going to get sales that speed up for a long time by reason of the huge mixture of factors we have chosen. Therefore, we are going to start something like an autocatalytic reaction in chemistry, precisely the sort of multi-factor triggered Lollapalooza effect we need. The logistics and the distribution strategy of our business will be simple. There are only 2 practical ways to sell our beverage. 1. As syrup to fountains and restaurants, and 2. As a complete carbonated water product in containers. Wanting Lollapalooza results, we will naturally do it both ways. And wanting huge Pavlovian and social proof effects, we will always spend on advertising and sales promotion, per serving, over 40% of the fountain price for syrup needed to make the serving. A few syrup-making plants can serve the world. However, to avoid needless shipping of mere space and water, we will need many bottling plants scattered over the world. We will maximize profits if, like early General Electric with light bulbs, we always set the first sale price, either 1 for fountain syrup or 2 for any container of our complete product. The best way to arrange this desirable profit-maximizing control is to make any independent bottler we need a subcontractor, not a vendee of syrup, and certainly not a vendee of syrup under a perpetual franchise specifying a syrup price frozen forever at its starting level. Being unable to get a patent or copyright on our super important flavor, we will work obsessively to keep our formula secret. We will make a big hoopla over our secrecy, which will enhance Pavlovian effects. Eventually, food chemical engineering will advance so that our flavor can be copied with near exactitude. But by that time, we will be so far ahead with such strong trademarks and complete, always available, worldwide distribution, that good flavor copying won't bar us from our objective. Moreover, the advances in food chemistry that help competitors will almost surely be accompanied by technological advances that will help us, including refrigeration, better transportation, and for dieters, ability to insert a sugar taste without inserting sugar's calories. Also, there will be related beverage opportunities we will seize. This brings us to a final reality check for our business plan. We will, once more, think in reverse like Jacoby. What must we avoid because we don't want it? 4 answers seem clear. First, we must avoid the protective, cloying, stop consumption effects of aftertaste that are a standard part of physiology, developed through Darwinian evolution to enhance the replication of man's genes by forcing a generally helpful moderation on the gene carrier. To serve our ends on hot days, a consumer must be able to drink container after container of our product with almost no impediment from aftertaste. We will find a wonderful no aftertaste flavor by trial and error, and will thereby solve this problem. Second, we must avoid ever losing even half of our powerful trademark name. It will cost us mightily, for instance, if our sloppiness should ever allow sale of any other kind of cola, for instance, a Pepsi-Cola. If there is ever a Pepsi-Cola, we will be the proprietor of the brand. Third, with so much success coming, we must avoid bad effects from envy, which is given a prominent place in the Ten Commandments because envy is so much a part of human nature. The best way to avoid envy, recognized by Aristotle, is to plainly deserve the success we get. We will be fanatic about product quality, quality of product presentation, and reasonableness of prices, considering the harmless pleasure we will provide. Fourth, after our trademarked flavor dominates our new market, we must avoid making any huge and sudden change in our flavor. Even if a new flavor performs better in blind taste tests, changing to that new flavor would be a foolish thing to do. This follows because, under such conditions, our old flavor will be so entrenched in consumer preference by psychological effects that a big flavor change would do us little good. And it would do immense harm by triggering in consumers the standard deprival superreaction syndrome that makes takeaways so hard to get in any type of negotiation and helps make most gamblers so irrational. Moreover, such a large flavor change would allow a competitor, by copying our old flavor, to take advantage of both 1. The hostile consumer superreaction to deprival, and 2. The huge love of our original flavor created by our previous work. Well, that is my solution to my own problem of turning $2 million into $2 trillion, even after paying out billions of dollars in dividends. I think it would have won with Glotz in 1884, and should convince you more than you expected at the outset. After all, the correct strategies are clear after being related to elementary academic ideas brought into play by the helpful notions. How consistent is my solution with the history of the real Coca-Cola Company? Well, as late as 1896, 12 years after the fictional Glotz was to start vigorously with $2,018,084, the real Coca-Cola Company had a net worth under $150,000 and earnings of about zero. And thereafter, the real Coca-Cola Company did lose half its trademark and did grant perpetual bottling franchises at fixed syrup prices. And some of the bottlers were not very effective and couldn't easily be changed. And the real Coca-Cola Company, with this system, did lose much pricing control that would have improved results had it been retained. Yet even so, the real Coca-Cola Company followed so much of the plan given to Glotz that it is now worth about $125 billion and will have to increase its value at only 8% per year until 2034 to reach a value of $2 trillion. And it can hit an annual physical volume target of 2.92 trillion servings if servings grow until 2034 at only 6% per year, a result consistent with much past experience and leaving plenty of plain water ingestion for Coca-Cola to replace after 2034. So I would guess that the fictional Glotz, starting earlier and stronger and avoiding the worst errors, would have easily hit his $2 trillion target. And he would have done it well before 2034. This brings me at last to the main purpose of my talk. Large educational implications exist if my answer to Glotz's problem is roughly right, and you make one more assumption I believe true, that most Ph. Educators, even psychology professors and business school deans, would not have given the same simple answer I did. And if I am right in these two ways, this would indicate that our civilization now keeps in place a great many educators who can't satisfactorily explain Coca-Cola, even in retrospect, and even after watching it closely all their lives. This is not a satisfactory state of affairs. Academic psychology, while it is admirable and useful as a list of ingenious and important experiments, lacks interdisciplinary synthesis. Moreover, and this result is even more extreme, the brilliant and effective executives who, surrounded by business school and law school graduates, have run the Coca-Cola company with glorious success in recent years, also did not understand elementary psychology well enough to predict and avoid the new Coke fiasco, which dangerously threatened their company. That people so talented, surrounded by professional advisors from the best universities, should thus demonstrate a huge gap in their education is also not a satisfactory state of affairs. Such extreme ignorance, in both the high reaches of academia and the high reaches of business, is a Lollapalooza effect of a negative sort, demonstrating grave defects in academia. Because the bad effect is a Lollapalooza, we should expect to find intertwined multiple academic causes. I suspect at least two such causes. First, academic psychology, while it is admirable and useful as a list of ingenious and important experiments, lacks interdisciplinary synthesis. In particular, not enough attention is given to Lollapalooza effects coming from combinations of psychological tendencies. This creates a situation reminding one of a rustic teacher who tries to simplify schoolwork by rounding pi to an even 3. And it violates Einstein's injunction that everything should be made as simple as possible, but no more simple. In general, psychology is laid out and misunderstood, as electromagnetism would now be misunderstood if physics had produced many brilliant experimenters like Michael Faraday and no grand synthesizer like James Clerk Maxwell. Academic psychology departments are immensely more important and useful than other academic departments think. And at the same time, the psychology departments are immensely worse than most of their inhabitants think. It is, of course, normal for self-appraisal to be more positive than external appraisal. Indeed, a problem of this sort may have given you your speaker today. And second, there is a truly horrible lack of synthesis, blending psychology and other academic subjects. But only an interdisciplinary approach will correctly deal with reality in academia, as with the Coca-Cola company. In short, academic psychology departments are immensely more important and useful than other academic departments think. And at the same time, the psychology departments are immensely worse than most of their inhabitants think. It is, of course, normal for self-appraisal to be more positive than external appraisal. Indeed, a problem of this sort may have given you your speaker today. But the size of this psychology department gap is preposterously large. In fact, the gap is so enormous that one very eminent university, Chicago, simply abolished its psychology department, perhaps with an undisclosed hope of later creating a better version. In such a state of affairs, many years ago and with much that was plainly wrong already present, the new Coke fiasco occurred. Therein, Coke's executives came to the brink of destroying the most valuable trademark in the world. The academically correct reaction to this immense and well-publicized fiasco would have been the sort of reaction Boeing would display if 3 of its new airplanes crashed in a single week. After all, product integrity is involved in each case, and the plane educational failure was immense. But almost no such responsible, Boeing-like reaction has come from academia. Instead, academia, by and large, continues in its balkanized way to tolerate psychology professors who misteach psychology, non-psychology professors who fail to consider psychological effects obviously crucial in their subject matter, and professional schools that carefully preserve psychological ignorance coming in with each entering class and are proud of their inadequacies. Yet, even though this regrettable blindness and lassitude is now the normal academic result, are there exceptions providing hope that disgraceful shortcomings of the education establishment will eventually be corrected? Here, my answer is a very optimistic yes. For instance, consider the recent behavior of the economics department of the University of Chicago. Over the last decade, this department has enjoyed a near monopoly of the Nobel Prizes in economics, largely by getting good predictions out of free market models postulating man's rationality. And what is the reaction of this department after winning so steadily with its rational man approach? Well, it has just invited into a precious slot amid its company of greats a wise and witty Cornell economist, Richard Thaler. And it has done this because Thaler pokes fun at much that is holy at the University of Chicago. Indeed, Thaler believes, with me, that people are often massively irrational in ways predicted by psychology that must be taken into account in microeconomics. In so behaving, the University of Chicago is imitating Darwin, who spent much of his long life thinking in reverse as he tried to disprove his own hardest-won and best-loved ideas. And so long as there are parts of academia that keep alive its best values by thinking in reverse like Darwin, we can confidently expect that silly educational practices will eventually be replaced by better ones, exactly as Carl Jacobi might have predicted. 309. Thaler pokes fun at Muckley that is holy at the University of Chicago. Indeed, Thaler believes, with me, that people are often massively irrational in ways predicted by psychology that must be taken into account. Into microeconomics. This will happen because the Darwinian approach, with its habitual objectivity taken on as a sort of hair shirt, is a mighty approach indeed. No less a figure than Einstein said that one of the 4 causes of his achievement was self-criticism, ranking right up there alongside curiosity, concentration, and perseverance. And to further appreciate the power of self-criticism, consider where lies the grave of that very ungifted undergraduate, Charles Darwin. It is in Westminster Abbey, right next to the headstone of Isaac Newton, perhaps the most gifted student who ever lived, honored on that headstone in 8 Latin words constituting the most eloquent praise in all graveyard print. Hae depositum est, quod mortal fuit issae Newtoni. Here lies that which was mortal of Isaac Newton. A civilization that so places a dead Darwin will eventually develop and integrate psychology in a proper and practical fashion that greatly increases skills of all sorts. But all of us who have dollops of power and see the light should help the process along. There is a lot at stake. If, in many high places, a universal product as successful as Coca-Cola is not properly understood and explained, it can't bode well for our competency in dealing with much else that is important. Add that was a favorite of mine. The company that needs a new machine tool and hasn't bought it is already paying for it. Of course, those of you with 50% of net worth in Coca-Cola stock, occurring because you tried to so invest 10% after thinking like I did in making my pitch to Glotz, can ignore my message about psychology as too elementary for useful transmission to you. But I am not so sure that this reaction is wise for the rest of you. The situation reminds me of the old-time Warner and Swassey ad that was a favorite of mine. The company that needs a new machine tool and hasn't bought it is already paying for it. Nothing to add. Number 4. Question: do you use a computer? Answer: I don't. I do have one in my office, but I've never turned it on. In fact, I wouldn't even know how to plug it in. In my life, there are not many questions I can't properly deal with using my $40 adding machine and dog-eared compound interest table. Talk 4 Revisited. In this talk, I attempted to demonstrate large, correctable, and important cognitive failure in U.S. academia and business. After all, I argued. 1. If academia and business functioned with best practicable results, most denizens would be able to explain the success of the Coca-Cola Company through parsimonious use of basic concepts and problem-solving techniques. Yet, 2. As the new Coke fiasco and its aftermath indicated, neither academia nor business had a respectable grasp of the simple realities causing the success of Coca-Cola. As matters worked out, my 1996 talk failed to get through to almost all people hearing it. Then later, between 1996 and 2006, even when the talk's written version was slowly read twice by very intelligent people who admired me, its message likewise failed. In almost all cases, the message did not get through in any constructive way. On the other hand, no one said to me that the talk was wrong. Instead, people were puzzled briefly, then moved on. Thus, my failure as a communicator was even more extreme than the cognitive failure I was trying to explain. Why? The best explanation, I now think, is that I displayed gross folly as an amateur teacher. I attempted too much. I have always avoided all people who want to converse at length about the meaning of meaning. Yet I chose as my title, Practical Thought About Practical Thought. This was a start into tough territory. Then I worked out a long, complex interplay of 5 generalized, powerful problem-solving tricks with basic ideas from a great many disciplines. I particularly included psychology, about which I wanted to demonstrate that there is much lamentable ignorance, even among highly educated people, some of whom teach psychology. My demonstration, naturally, relied on correct psychology as part of my would-be demonstration. This was logically sound. But if psychological ignorance is widespread, why would most of my hearers recognize that my version of psychology was correct? Thus, for most hearers, I did the rough equivalent of trying to explain some hard-to-comprehend ideas by simply defining those ideas as equivalent to themselves. And this was not the outer limit of my teaching folly. After I knew that the written version of my talk was hard to understand, I consented to an order of talks in the first edition of Poor Charlie's Almanac wherein my psychology talk was Talk 10, inserted many pages after Talk 4. Instead, I should have recognized that the order of the 2 talks should be reversed, considering that Talk 4 assumed that hearers had already mastered basic psychology, the subject of Talk 10. Then finally, in the second edition of the Almanac, I have preferred to maintain the original, unhelpful order of the 2 talks. I did this because I like closing the book with my most recent organization of psychology into a sort of checklist that has long been helpful to me. Editor's note: Talk 10 is now Talk 11 in this edition. Readers of the second and third edition, if they wish, can correct somewhat for the teaching defects that I have stubbornly retained. That is, they can reread Talk 4 after mastering the final talk. If they are willing to endure this ordeal, I predict that at least some of them will find the result worth the effort. Teachers open the door, but you must enter by yourself. Chinese proverb. Having ranted in the previous speech about all that is wrong in academia, Charlie holds forth here on the solutions. Delivered in 1998 at the 50th reunion of his Harvard Law School class, this talk focuses on a hugely complicated issue, the narrowness of elite education, and segments it into elements whose solutions, when taken together, form a satisfactory answer to the problem. Through a series of rhetorical questions, Charlie posits that professionals such as attorneys, to their own detriment, lack multidisciplinary skills. From his own extensive multidisciplinary studies, he recognizes that there are subconscious mental tendencies that keep people from broadening their own horizons sufficiently. Nonetheless, he brings unique and memorable solutions to the problem. This talk of favorite of your editor clearly demonstrates Charlie's uncommon common sense. He says, when it really matters, as with pilots and surgeons, educational systems employ highly effective structures. Yet they don't employ these same, well-understood structures in other areas of learning that are also important. If superior structures are known and available, why don't educators more broadly utilize them? What could be more simple? Talk 5. The need for more multidisciplinary skills from professionals. Educational implications. 50th reunion of Harvard Law School class of 1948. April 240, 1998. Today I am going to engage in a game reminding us of our old professors, Socratic solitaire. I will ask and briefly answer 5 questions. 1. Do broad-scale professionals need more multidisciplinary skill? 2. Was our education sufficiently multidisciplinary? 3. In elite broad-scale soft science, what is the essential nature of practicable best-form multidisciplinary education? 4. In the last 50 years, how far has elite academia progressed toward attainable best-form multidisciplinarity? 5. What educational practices would make progress faster? We start with the question, do broad-scale professionals need more multidisciplinary skill? To answer the first question, we must first decide whether more multidisciplinarity will improve professional cognition. And co-decide what will cure bad cognition. It will help to know what causes it. One of Bernard Shaw's characters explained professional defects as follows. In the last analysis, every profession is a conspiracy against the laity. There is a lot of truth in Shaw's diagnosis, as was early demonstrated when in the 16th century, the dominant profession, the clergy, burned William Tyndale at the stake for translating the Bible into English. William Tyndale, 1495–1536. William Tyndale, born in Gloucestershire, England, earned a degree from Oxford and became a priest. He found England hostile to his beliefs and spent time in Germany and Belgium, where he expanded his beliefs and spread the teachings of Martin Luther. His books having been burned and his having become a continuing target of hostility, he nonetheless continued to publish Bible translations and other tracts. After months of imprisonment, he was condemned for heresy, strangled to death, and publicly cremated. Later, Tyndale's translation formed the basis of the first royally approved English-language Bible and had great impact on the development of the English language. But Shaw plainly understates the problem in implying that a conscious, self-interested malevolence is the main culprit. More important, there are frequent, terrible effects in professionals from intertwined subconscious mental tendencies, 2 of which are exceptionally prone to cause trouble. 1. Incentive-caused bias, a natural cognitive drift toward the conclusion that what is good for the professional is good for the client and the wider civilization, and 2. Man with a hammer tendency, with the name taken from the proverb. To a man with only a hammer, every problem tends to look pretty much like a nail. One partial cure for man with a hammer tendency is obvious. If a man has a vast set of skills over multiple disciplines, he, by definition, carries multiple tools and therefore will limit bad cognitive effects from man with a hammer tendency. Moreover, when he is multidisciplinary enough to absorb from practical psychology the idea that all his life he must fight bad effects from both the tendencies I mentioned, both within himself and from others, he has taken a constructive step on the road to worldly wisdom. If A is narrow professional doctrine and 8 consists of the big, extra useful concepts from other disciplines, then clearly the professional possessing A plus B will usually be better off than the poor possessor of A alone. How could it be otherwise? And thus, the only rational excuse for not acquiring more B is that it is not practical to do so, given the man's need for A and the other urgent demands in his life. I will later try to demonstrate that this excuse for interdisciplinarity, at least for our most gifted people, is usually unsound. Broad-scale problems, by definition, cross many academic disciplines. My second question is so easy to answer that I won't give it much time. Our education was far too unidisciplinary. Broad-scale problems, by definition, cross many academic disciplines. Accordingly, using a unidisciplinary attack on such problems is like playing a bridge hand by counting trumps while ignoring all else. This is bonkers, sort of like the Mad Hatter's Tea Party. But nonetheless, too much that is similar remains present in professional practice, and even worse, has long been encouraged in isolated departments of soft science, defined as everything less fundamental than biology. Even in our youth, some of the best professors were horrified by bad effects from balkanization of academia into insular, turf-protecting enclaves where notions were maintained by leaps of faith plus exclusion of non-believers. Alfred North Whitehead, for one, long ago sounded an alarm in strong language when he spoke of the fatal unconnectedness of academic disciplines. And since then, elite educational institutions, agreeing more and more with Whitehead, have steadily fought unconnectedness by bringing in more multidisciplinarity, causing some awesome plaudits to be won in our time by great unconnectedness fighters at borders of academic disciplines. For instance, Harvard's E. O. Wilson and Caltech's Linus Pauling. Modern academia now gives more multidisciplinarity than we received, and is plainly right to do so. Alfred North Whitehead, 1861-1947. Fools act on imagination without knowledge. Pedants act on knowledge without imagination. True courage is not the brutal force of vulgar heroes, but the firm resolve of virtue and reason. Not ignorance, but ignorance of ignorance is the depth of knowledge. The silly question is the first intimation of some totally new development. Civilization can only be understood by those who are civilized. No one who achieves success does so without acknowledging the help of others. The wise and confident acknowledge this help with gratitude. Almost all new ideas have a certain aspect of foolishness when they are first produced. The natural third question then becomes, what is now the goal? What is the essential nature of best form multidisciplinarity in elite education? This question, too, is easy to answer. All we have to do is examine our most successful narrow-scale education, identify essential elements, and scale up those elements to reach the sensible solution. Yes, I am suggesting today that mighty Harvard would do better if it thought more about pilot training. To find the best educational narrow-scale model, we have to look not at unthreatened schools of education and the like, too much driven by our too counterproductive psychological tendencies and other bad influences, but instead, look where incentives for effective education are strongest and results are most closely measured. This leads us to a logical place, the hugely successful education now mandatory for pilots. Yes, I am suggesting today that mighty Harvard would do better if it thought more about pilot training. In piloting, as in other professions, one great hazard is bad effect from man-with-a-hammer tendency. We don't want a pilot ever to respond to a hazard as if it was hazard X, just because his mind contains only a hazard X model. And so, for that and other reasons, we train a pilot in a strict six-element system. 1. His formal education is wide enough to cover practically everything useful in piloting. 2. His knowledge of practically everything needed by pilots is not taught just well enough to enable him to pass one test or two. Instead, all his knowledge is raised to practice-based fluency, even in handling 2 or 3 intertwined hazards at once. 3. Like any good algebraist, he is made to think sometimes in a forward fashion and sometimes in reverse, and so he learns when to concentrate mostly on what he wants to happen, and also when to concentrate mostly on avoiding what he does not want to happen. 4. His training time is allocated among subjects so as to minimize damage from his later malfunctions, and so what is most important in his performance gets the most training coverage and is raised to the highest fluency levels. 5. Checklist. Routines are always mandatory for him. 6. Even after original training, he is forced into a special knowledge maintenance routine. Regular use of the aircraft simulator to prevent atrophy through long disuse of skills needed to cope with rare and important problems. We need for best results to have multidisciplinary coverage of immense amplitude, with all needed skills raised to an ever-maintained practice-based fluency. The need for this clearly correct six-element system, with its large demands in a narrow-scale field where stakes are high, is rooted in the deep structure of the human mind. Therefore, we must expect that the education we need for broad-scale problem-solving will keep all these elements, but with awesomely expanded coverage for each element. How could it be otherwise? Thus it follows, as the night the day, that in our most elite broad-scale education wherein we are trying to make silk purses out of silk, we need for best results to have multidisciplinary coverage of immense amplitude, with all needed skills raised to an ever-maintained practice-based fluency, including considerable power of synthesis at boundaries between disciplines, with the highest fluency levels being achieved where they are most needed, with forward and reverse thinking techniques being employed in a manner reminding one of inversion in algebra, and with checklist, routines being a permanent part of the knowledge system. There can be no other way, no easier way, to broad-scale worldly wisdom. Thus the task, when first identified in its immense breadth, seems daunting, verging on impossible. But the task, considered in full context, is far from impossible when we consider three factors. First, the concept of all needed skills lets us recognize that we don't have to raise everyone's skill in celestial mechanics to that of Laplace, and also ask everyone to achieve a similar skill level in all other knowledge. Instead, it turns out that the truly big ideas in each discipline, learned only in essence, carry most of the freight. And they are not so numerous, nor are their interactions so complex, that a large and multidisciplinary understanding is impossible for many, given large amounts of talent and time. Second, in elite education, we have available the large amounts of talent and time that we need. After all, we are educating the top 1% in aptitude, using teachers who, on average, have more aptitude than the students. And we have roughly 13 long years in which to turn our most promising 12-year-olds into starting professionals. Third, thinking by inversion and through use of checklists is easily learned in broad-scale life as in piloting. Moreover, we can believe in the attainability of broad multidisciplinary skill for the same reason the fellow from Arkansas gave for his belief in baptism. I've seen it done. We all know of individuals, modern Ben Franklins, who have 1. Achieved a massive multidisciplinary synthesis with less time in formal education than is now available to our numerous brilliant young and Z, thus become better performers in their own disciplines, not worse, despite diversion of learning time to matter outside the normal coverage of their own disciplines. Given the time and talent available and examples of successful masters of multiple disciplines, what is shown by our present failure to minimize bad effects from man-with-a-hammer tendency is only that you can't win big in multidisciplinarity in soft science academia if you are so satisfied with the status quo, or so frightened by the difficulties of change, that you don't try hard enough to win big. Which brings us to our fourth question. Judged with reference to an optimized, feasible multidisciplinary goal, how much has elite soft science education been corrected after we left? The answer is that many things have been tried as corrections in the direction of better multidisciplinarity. And, after allowing for some counterproductive results, there has been some considerable improvement, net. But much desirable correction is still undone and lies far ahead. For instance, soft science academia has increasingly found it helpful when professors from different disciplines collaborate, or when a professor has been credentialed in more than one discipline. But a different sort of correction has usually worked best, namely augmentation, or take what you wish, practice that encourages any discipline to simply assimilate whatever it chooses from other disciplines. Perhaps it has worked best because it bypassed academic squabbles rooted in the tradition and territoriality that had caused the unidisciplinary folly for which correction was now sought. In his great work, A Philosophical Essay on Probabilities, Laplace sets out one of his signature ideas. We may regard the present state of the universe as the effect of its past and the cause of its future, an intellect which at a certain moment would know all forces that set nature in motion, and all positions of all items of which nature is composed. If this intellect were also vast enough to submit these data to analysis, it would embrace in a single formula the movements of the greatest bodies of the universe and those of the tiniest atom. For such an intellect, nothing would be uncertain, and the future, just like the past, would be present before its eyes. Economics, in turn, took in from a biologist the tragedy of the commons model, thus correctly finding a wicked, invisible foot in coexistence with Adam Smith's angelic, invisible hand. Roger Fisher, B. 1922. Roger Fisher earned a law degree from Harvard in 1948 and stayed on as a faculty member in the law school. He became director of the Harvard Negotiation Project in 1980. An expert in negotiation and conflict resolution, he co-authored with Bill Urey Getting to Yes, a classic text in win-win negotiation techniques. In any event, through increased use of take what you wish, many soft science disciplines reduced folly from man-with-a-hammer tendency. For instance, led by our classmate Roger Fisher, the law schools brought in negotiation, drawing on other disciplines. Over 3 million copies of Roger's wise and ethical negotiation book have now been sold, and his life's achievement may well be the best, ever, from our whole class. The law schools also brought in a lot of sound and useful economics, even some good game theory to enlighten antitrust law by better explaining how competition really works. Economics, in turn, took in from a biologist the tragedy of the commons model, thus correctly finding a wicked, invisible foot in coexistence with Adam Smith's angelic, invisible hand. These days, there is even some behavioral economics, wisely seeking aid from psychology. However, an extremely permissive practice like take what you wish was not destined to have 100% admirable results in soft science. Indeed, in some of its worst outcomes, it helped changes like 1. Assimilation of Freudianism in some literature departments, 2. Importation into many places of extremist political ideologies of the left or right that had, for their possessors, made regain of objectivity almost as unlikely as regain of virginity. And 3. Importation into many law and business schools of hard-form, efficient market theory, by misguided would-be experts in corporate finance, one of whom kept explaining Berkshire Hathaway's investing success by adding standard deviations of luck until, at 6 standard deviations, he encountered enough derision to force a change in explanation. Moreover, even when it avoided such lunacies, Take What You Wish had some serious defects. For instance, takings from more fundamental disciplines were often done without attribution, sometimes under new names, with little attention given to rank in a fundamentalness order for absorbed concepts. Such practices, 1. Act like a lousy filing system that must impair successful use and synthesis of absorbed knowledge, and 2. Do not maximize in soft science the equivalent of Linus Pauling's systematic mining of physics to improve chemistry. There must be a better way. This brings us, finally, to our last question. In elite soft science, what practices would hasten our progress toward optimized disciplinarity? Here again, there are some easy answers. First, many more courses should be mandatory, not optional. And this, in turn, requires that the people who decide what is mandatory must possess large, multidisciplinary knowledge maintained in fluency. This conclusion is as obvious in the training of the would-be broad-scale problem solver as it is in the training of the would-be pilot. For instance, both psychology mastery and accounting mastery should be required as outcomes in legal education. Yet in many elite places, even today, there are no such requirements. Often, such is the narrowness of mind of the program designers that they neither see what is needed and missing nor are able to fix deficiencies. Second, there should be much more problem-solving practice that crosses several disciplines, including practice that mimics the function of the aircraft simulator in preventing loss of skills through disuse. Let me give an example, roughly remembered, of this sort of teaching by a very wise but untypical Harvard Business School professor many decades ago. This professor gave a test involving 2 unworldly old ladies who had just inherited a New England shoe factory, making branded shoes and beset with serious business problems described in great detail. The professor then gave the students ample time to answer with written advice to the old ladies. In response to the answers, the professor next gave every student an undesirable grade, except for one student who was graded at the top by a wide margin. What was the winning answer? It was very short and roughly as follows. This business field and this particular business, in its particular location, present crucial problems that are so difficult that unworldly old ladies cannot wisely try to solve them through hired help. Given the difficulties and unavoidable agency costs, the old ladies should promptly sell the shoe factory, probably to the competitor who would enjoy the greatest marginal utility advantage. Thus, the winning answer relied not on what the students had most recently been taught in business school, but instead on more fundamental concepts like agency costs and marginal utility, lifted from undergraduate psychology and economics. My fellow members of the Harvard Law class of 1948, if only we had been much more often tested like that, just think of what more we might have accomplished. Incidentally, many elite private schools now wisely use such multidisciplinary methods in 7th grade science while, at the same time, many graduate schools have not yet seen the same light. This is one more sad example of Whitehead's fatal unconnectedness in education. Third, most soft science professional schools should increase use of the best business periodicals, like the Wall Street Journal, Forbes, Fortune, etc. Such periodicals are now quite good and perform the function of the aircraft simulator, if used to prompt practice in relating events to multidisciplinary causes, often intertwined. And sometimes the periodicals even introduce new models for causes, instead of merely refreshing old knowledge. Also, it is not just slightly sound to have the student practice in school what he must practice lifelong after formal education is over if he is going to maximize his good judgment. I know no person in business, respected for verified good judgment, whose wisdom maintenance system does not include use of such periodicals. Why should academia be different? Yet, such periodicals are not quite good and perform the function of the aircraft simulator, if used to prompt practice in relating events to multidisciplinary causes, often intertwined. Yet, fourth, in filling scarce academic vacancies, professors of super strong, passionate political ideology, whether on the left or right, should usually be avoided. So also for students. Best form multidisciplinarity requires an objectivity such passionate people have lost, and a difficult synthesis is not likely to be achieved by minds in ideological fetters. In our day, some Harvard law professors could, and did point to a wonderful example of just such ideology-based folly. This, of course, was the law school at Yale, which was then viewed by many at Harvard as trying to improve legal education by importing a particular political ideology as a dominant factor. Fifth, soft science should more intensely imitate the fundamental organizing ethos of hard science, defined as the fundamental four-discipline combination of math, physics, chemistry, and engineering. This ethos deserves more imitation. Richard P. Feynman, 1918-1988. Richard Feynman was born in Far Rockaway, New York. He earned an undergraduate degree in physics from the Massachusetts Institute of Technology and went on to Princeton for a Ph.D. He worked on the Manhattan Project and was instrumental in the development of the atomic bomb. He held faculty posts at Cornell University until L95L and then seated at Caltech. Feynman's major contribution to physics was in quantum electrodynamics, the study of the interactions of electromagnetic radiation with atoms and more fundamental particles. He shared the Nobel Prize in Physics in 1965. Late in life, Feynman was named to the commission that investigated the Challenger space shuttle accident. He demonstrated the effect of cold temperatures on rubber O-rings and showed how the resulting shrinkage allowed hot gases to escape, causing the explosion. Read his book. Surely you're joking, Mr. Feynman. After all, hard science has, by a wide margin, the best record for both 1. Avoiding unidisciplinary folly, and 2. Making user-friendly a big patch of multidisciplinary domain, with frequent, good results like those of physicist Richard Feynman, when he so quickly found in cold O-rings the cause of our greatest space shuttle disaster. And previous extensions of the ethos into softer fare have worked well. For instance, biology. Starting 150 years ago with a descriptive mess not much related to deep theory, has gradually absorbed the fundamental organizing ethos with marvelous results as new generations have come to use better thinking methods, containing models that answer the question, why? And there is no clear reason why the ethos of hard science can't also help in disciplines far less fundamental than biology. Here, as I interpret it, is this fundamental organizing ethos I am talking about. 1. You must both rank and use disciplines in order of fundamentalness. 2. You must, like it or nor, master to tested fluency, and routinely use the truly essential parts of all four constituents of the fundamental four-discipline combination, with particularly intense attention given to disciplines more fundamental than your own. 3. You may never practice either cross-disciplinary absorption without attribution or departure from a principle of economy that forbids explaining in any other way anything readily explainable from more fundamental material in your own or any other discipline. 4. But when the step 3 approach doesn't produce much new and useful insight, You should hypothesize and test to establishment new principles, ordinarily by using methods similar to those that created successful old principles. But you may not use any new principle, inconsistent with an old one, unless you can now prove that the old principle is not true. There is an old two-part rule that often works wonders in business, science, and elsewhere. 1. Take a simple, basic idea, and 2. Take it very seriously. You will note that, compared with much current practice in soft science, the fundamental organizing ethos of hard science is more severe. This reminds one of pilot training, and this outcome is not a coincidence. Reality is talking to anyone who will listen. Like pilot training, the ethos of hard science does not say, take what you wish, but learn it all to fluency, like it or not. And rational organization of multidisciplinary knowledge is forced by making mandatory 1. Full attribution for cross-disciplinary takings and mandatory preference